Yeah, the stuff I've been reading from Israel is an
Guys,
indication. Sorry,
stream started.
sorry.
What's up, guys? We are here. Britt ruined the intro. You guys, he ruined it. You know, everybody yell at Britt. Can y'all hear me? Yeah, y'all can hear me. Britt ruined the intro. You know,
You didn't immediately.
I never told him that we were streaming, so it's my fault. But it's Britt's fault, really. But it's my fault. What's up, Jesse, Mama Pawn, Flavio, Diablo, Sully, Steve, Jensen? Good afternoon, guys. We have Nvidia earnings today. It's a big day. It's a moment in time. It's the biggest thing of it's the biggest event of the week. It's definitely the biggest event of the week for sure. Maybe the biggest event of the month. If you take a look at Nvidia here, Nvidia is sitting at 222s right now. It has pulled back pretty substantially from its big optimistic open. Or actually, it dropped a little bit of the opening bell today. And now we're kind of sitting back down, closer to where we opened. We're a little bit red from where we opened. But we're here, guys. We're here. Nvidia earnings is soon. Is that a new one? I don't know. I'm sorry. This song is too much right now. It's too much. I can't. I know we're hyped about Nvidia earnings. Like I know, but it's just too much. You know. With that said, though, we're gonna do a poll today. We got a lot of stuff to talk about. Are you bullish or bearish on Nvidia earnings today, guys? Bull or bear on Nvidia earnings? It's a lot cleaner. We're gonna stream the entire thing live as we do here. Maybe I can read this in. Yeah, there we go. Nvidia is expecting $1.78 EPS. We'll take a look at the graphs here real quick. The implied volatility move today is about 6.5% here, guys. 6.5%. Yeah, that song was just way too much. Just way too much. I just couldn't deal with it. But first of all, we're gonna do a poll. Does Nvidia beat or miss their Q1 earnings today? So let me know in the poll, beat or miss. We got beat as an option. We have miss as an option. We come in as expected. So basically, do they come in higher than expected today? Higher or lower than expected? Let me know. Beat, but it will dump. Yeah, I think Nvidia right now is in a situation where it needs to beat. It needs to beat and race. Some of the things that we're hearing chatter in the stock market for are SpaceX IPO chatter has been heating up. Recent reports suggest SpaceX is exploring a partial IPO of Starlink this year, potentially at 300 billion plus valuation for Starlink, with the parent SpaceX rumored at 400 to 500 billion. SpaceX is a major Nvidia customer. Starlink's ground station, satellite edge compute, and broader XAI Grok infrastructure all run on Nvidia. XAI specifically has been building one of the largest GPU clusters in the world. They call it the Colossus in Memphis, with 100,000 plus H100s expanding to H200 in Blackwell. If SpaceX Starlink files an S1, it discloses Nvidia spending. That's a multi-billion-dollar customer commitment. And there's a lot of talk about SpaceX IPO coming soon this year. We'll see what that looks like. But yeah, that's one of the big questions.
Yeah, I'm curious to see where that ends up being valued.
Yeah, that might be a big IPO. That might be, I mean, obviously it's going to be a big IPO. OpenAI, obviously going to be pretty big IPO as well. But that's a big story. That's a big talking point for it. And again, look, Nvidia today, if we take a look at like Earnings Whisper, right? I like to look at Earnings Whisper. And Earnings Whisper has it at about $1.70 EPS per share. You know, also dropping after the closing bell, we have Elf Beauty, which is like a makeup company. So you do have like Elf Beauty dropping after the closing bell. 78 to 79 billion in revenue. Most of the whispers though were that we're going to come in at about $1.78, which would be 120% year over year for Nvidia. And again, this is by Earnings Whisper. This is what we're looking at, Earnings Whisper right here. So we're looking at Earnings Whisper. Elf Beauty's been kind of volatile too, if I remember correctly. I know it was up a lot. I had some people talking to me about Elf not that long ago. And I told him it's just not really something I understand. It's a makeup company. So if there's one thing I do not understand, you know, it's makeup. And yeah, it's down 65% right now in the last, since September of last year. So 65% roughly drop in Elf. So we'll pay attention to that. We also have Intuit. I had some people asking me about Intuit earlier. We'll see what that looks like. But here's the Nvidia trend. Nvidia recently broke all-time highs all the way up to $236.50 a share. The current all-time high, if we're looking at intraday all-time high, it would be $236.54. Now, the implied volatility is about a 6.5% move, right? A 6.5% move. So just to pull out my handy calculator here, if we are currently at what? 236.50 is the all-time high, but we're at 222s, and we do a 6.5% move up, then that would put us right around 236.40s. So that would put us close to all-time highs if we do that big of a move on the upside, right? So, and again, if we look at the intraday, it's 240s. But if we look at the total all-time high, it's actually about 241 if you include pre-market activity. But the intraday all-time high, 236.50s, really, you know, if you look at pre-market, it's like 241. And so if we do make that 6.5% implied volatility move today on the upside, maybe we break all-time highs today. We'll see. Maybe we break all-time highs. What's up, Connor, Danny, Mama Pawn, Jesse, Sully, Serpent, NY? Nvidia always beats the last few quarters, but the market makers are never satisfied. They want more. And again, I think we've kind of dragged ourselves into a corner here with this type of thing, though. I think markets have priced this in. You know, markets have priced in beat and raise scenario, meaning they have to beat EPS, beat revenue, raise guidance, and we'll see what happens. We'll see what happens. Again, the expected number about 178, 120% year over year. That's a street consensus. Revenue is expected about 79 billion, which would be up about 80% year over year. Last quarter, Nvidia guided for 76.4 to 79.6 billion. Quarter two revenue whispers at 86 billion plus. Implied volatility 53% on front month options. The single most important number today, I think, is data center revenue, though. This is what the entire AI rally hinges on. Data center revenue expected at 66 to 68 billion, which is about 85% of their total revenue. About 85%. Year-over-year growth needed at about 95 to 100%. Anything below 90% is a growth killer. Tape killer. You know, anything below 90% growth will cause fear, most likely, if we're looking at data center revenue. 70 billion would be a pretty clear beat. But watch the sequential growth rate from quarter four to quarter one, and we'll see what happens there. Also, we want to pay attention to the Blackwell ramp. You know, the Blackwell ramp, the single most watched product cycle in tech right now. B200, GB200 racks are the workhorses. Street is showing maybe 40 to 50 billion in Blackwell revenue in quarter one versus 25 billion in quarter four. And so we're going to see if Jensen will confirm yield improvement quarter over quarter, hyperscale delivery cadence, and more. Another story right now that's really after, you know, we had that big meeting with Jensen Huang, Trump, and all the other tech CEOs in China is, will China start buying Nvidia chips like that? You know, they generally choose to buy domestic chips. We had a lot of back and forth, we had a lot of back and forth regarding everything in that, you know, we got news that essentially China unlocked like 6 or 7 companies to buy Nvidia chips, but then Trump also came out later and essentially said that China is not going to be buying A200 chips like that. Like, yeah, they might have been unlocked to do it, but they're not actually going to be most likely doing. And again, they're going to go with domestic chips, right? It's a race, right? It's a race for AI dominance, and they're going to choose domestically, you know, so that makes sense. I
don't blame him.
Yeah, no, I mean, I think that's understandable. Look, I can't criticize a country for saying, hey, you know what, we're going to go with, you know, like, it'd be the same thing if America's like, yo, we're going to go with American-made products. People would be like, yeah, you know, we can't really get mad at other companies when they choose to not buy our stuff. But, you know, I think our stuff is better, obviously. I think our stuff is better, but I can't knock them for not buying it. You know, and so, but either way, this will be a big talking point. You know, this will be a talking point. And we'll see what happens. We'll see if it, you know, helps them at all. Laugh song, please. Yeah, let me catch up on the chat. What's up, Pew? Dirt Road Champion says B. What's up, Britt?
I understand that there's a lot of weight behind Nvidia, but I kind of feel like the expectations on them to like outperform are unfair, honestly.
Crazy high valuations in AI, brother. Like crazy high expectations. And again, we've kind of backed ourselves into the corner with this. You know, here's like Soxel. You know, Soxel's ripping up today. Microchips are strong. Part of this is MU. Like, look at MU today. So MU has been up to 730s. AMD doing really good, up to 450s today. So again, we'll see what happens, but it's a big day for chips. It's a big day for stocks. What's your thoughts? Moon after earnings or dive? I don't know. Historically, Nvidia reacts negatively to earnings. It's just not quite good enough for them. You know, a lot of the moves get baked in prior to the earnings report itself. And with that said, like, the baked in move right now is on the upside. So we went from 196 back here in early May. We're at 196s. We're currently at 222s right now. We hit 240s. So, you know, we got a lot of upward movement heading into this earnings report. And if we look at odds makers here, right? If we look at odds makers, 96% chance currently that Nvidia beats quarterly earnings on Polymarket. So if we look at Polymarket, a 96% chance Nvidia beats. So what does this mean, right? This means that a beat is already baked into the market, so to speak. Like, it's already expected that we're going to beat earnings today for an Nvidia quarter one. It's already expected. Nobody expects us to miss. What that means if we do somehow miss earnings, like say we come in under expected for revenue, under expected for EPS, just one of them really. The other one could do great. If we come under expected for one, I expect Nvidia to drop substantially on this report, just because the bull side's already baked in. 96% chance on Polymarket that Nvidia beats. Upward movement leading into the earnings report here. We're at 222s. With all that said, I think there's a good chance that, you know, we're going to beat and raise regardless. The real question is going to come in the details of this earnings report. You know, what does Jensen say? Do they mention SpaceX? Do they mention China? You know, what's the story on inference versus training? You know, if you remember earlier, right? Earlier we heard news of a potential strike in Korea at Samsung. So Nvidia, you know, is related to this in a lot of different ways. Let's talk about that for a second. But earlier, we did hear of a potential strike. Now it looks like they got a last minute deal done, but this has been moving things regarding this strike. And let me find it. I know I had it somewhere here. Yeah, so the strike was supposed to start tomorrow, Thursday, May 21st, and run through June 7th. Part of this is that nearly 45,000 of Samsung's unionized workers were planning to walk off the job for 18 days starting tomorrow. And this does have to do with Nvidia. It's an Nvidia supply problem. So Samsung is one of the only companies globally to produce high-end memory chips used for generative AI, including top-of-the-line AI hardware from industry leaders such as Nvidia. So the chips at risk specifically were high bandwidth memory, HBM chips. I think MU makes these, Samsung makes these, SK Hynix makes these, and yeah, so if Samsung supply, and this is chips that they need, like Nvidia needs these, right? If this strike was going to happen, it might have been bad for headwinds moving forward over the next few quarters for Nvidia. But again, the strike, they got a last minute deal done. And so it doesn't look like that's, you know, it's really going to negatively impact them. But this is some stories that were moving. Again, MU was moving a lot on this news. You know, MU was up a little bit. It's kind of slowed down a little bit. But, you know, if I still think we could get a question related to this. You know, if a reporter asked Jensen, you know, about the strike, but it looks like we did get a last minute deal done here. And yeah, Nvidia is at around 220s right now if we look at Nvidia. So here's Nvidia. You get Nvidia at 223.13s right now, 223s. Technically green on the day. It closed at 220s. Again, if data center revenue comes in less than 66 billion, that's bad. If quarter two guidance comes in under 85 billion, that's bad. If gross margins guide for less than 75%, that's bad, right? If China commentary is defensive, meaning, you know, the 50 billion opportunity Jensen has talked about looks impaired, that's bad. Samsung HBM supply chain disclosed at risk, you know, Blackwell could get pushed, and more. So we'll see what happens here. S&P 500 right now, if we take a look at it, is moving up. It's at 74.50s here for the S&P. It is moving up into the closing bell at 22 minutes. But again, we'll see what happens here, guys. This should be a big report, a big event in markets. And yeah, it's definitely going to be something that influences the market today, tomorrow, and longer. So we'll see. We'll see, guys. Yeah, we're going to stream all of it. Thank you for the donation, or thank you for becoming a subscriber, Asman. Thank you, man. I appreciate it. Yeah, we're going to cover Intuit earnings. We're going to cover Elf earnings. We'll probably cover the other ones just kind of offhand about it. But we're definitely going to focus on Nvidia, maybe Elf, maybe Intuit.
So you still think even with the high expectations baked in that there's still a chance that they'll beat those even and have an upturn?
Yes. Yeah, I think we're beating and raising today. I think that's the most likely. Again, you can look at statistically, there's something called wisdom of the crowd. When markets are pricing in a 95% chance something happens, you know, this has to do like you have to look at this number right here, this 95% chance. It recently went down about 1%. But you have to look at it in terms of there's probably insiders that are making some of these bets too, right? Like right now, the odds makers, it's kind of an open market. You know, I've heard like the SEC is so busy with these that they don't have much time for much else. You know, that lawmakers are busy with Polymarket, with Call Sheep. And one of the things they're busy with is that it's really easy to insider trade on these, right? And so even outside of the insider trading, you do have something called the wisdom of the crowd. And 95% of people think Nvidia is going to beat and raise, meaning they're going to come in better than expected EPS, better than expected revenue, and raise their guidance. But it's so likely it's to a point where, again, if for some reason we do not beat and raise today, shit can hit the fan, because markets need a beat and raise scenario here. You know, so markets need a beat and raise scenario. If we don't, obviously that's not good. And Nvidia, I expect if we miss on EPS, miss on revenue, miss on guidance, you know, that's really bad for Nvidia, obviously. So yeah, we'll see, but it needs a beat and raise scenario. If it doesn't, again, the numbers that I'm looking at, data center revenue, one of the most important aspects of this. Again, it's expected at 66 to 68 billion. We come in under 66 for data center revenue. Nvidia's probably going down. Yeah, 70 billion would be a really nice beat. You know, if we come in over expected at 66, 68 and show up at 70 billion for data center revenue, that's great, obviously. But markets are somewhat bullish here still. Markets are still priced in. Nvidia has beaten and raised last 21 out of 23, 6 straight. Yeah, so Nvidia has beat and raised for 6 straight earnings reports. That's over a year, and that's a year and a half of beat and raises for Nvidia. But again, I think this can be good. It can also be a dumpster fire if Nvidia somehow does not beat and raise today. And so, yeah, it could be a dumpster fire if Nvidia somehow does not beat and raise today. So Nvidia needs a beat and raise situation here. We'll see if it does. You know, looking at our poll numbers, I'm assuming everybody is smart and going to bet on this poll that they're going to beat. 68% think they're going to beat. 20% think they're going to miss. Those are bad odds, guys. Y'all need to learn about making calculated bets here. Those are bad odds. 20% of you guys, out of almost 200 people, think they're going to miss. I think some of y'all just want the market burned. Am I wrong? Some of you guys just want the market to burn. What's up, Don? Yeah. What's up, Danny? What's up, Pew? What's up, Doom? What's up, Smack? What's up, Just Me? What's up, Vegas? What's up, G Money? Checkerboard. Eyes by Rhonda. What's up? Eyes by Rhonda. NY Mofo. Pawn. How you doing, brother? Let's see what happens here, guys. Do me a favor. Hit the like button. Hit the subscribe button. If Nvidia drops on this earnings report, are you buying? What price are you interested in buying Nvidia at right now, guys? Let me know. What price? Let me know. Here, guys. Let me know. Did I have it in sub-only mode? I thought I took sub-only mode off. Kind of wacky. I'm still in sub-only mode. You know what? Just for the unsubscribers, for those of you that don't love me enough not to subscribe, I'm going to turn it off right now. You know? Yeah. Non-subscribers awaken here in the chat. Non-subscribers awaken. Diablo, Sklee. 165, 160. Are y'all talking about buying Nvidia at 160? Okay, so all Nvidia has to do, chat, in order for you to buy it. You know, Nvidia just has to drop right now from 223 down to 160. A measly 30% drop for Nvidia. Then you're interested in buying it. You know, if we're talking long term, I'll buy it right. You know, I like it right here.
It'd scare me if it dropped to 160.
Yeah, but it's better to be fearful when others are greedy, Brit, and greedy when others are fearful. You know?
Yeah.
And so the people who typically, when stocks crash, the people who do the worst are people that get emotional and sell. People who do the best, people that dollar cost average, that average in, that buy the dip, those people make a lot of money historically. Not saying you're going to do it now, but yeah.
Oh, lie, you took that from Marcus Aurelius, didn't you?
Yeah, Marcus Aurelius is probably the greatest stock market investor of his age.
What?
Yeah, you know, I believe it. You know, yeah, that was him. You know, the Roman stock market he invested in. I believe it. I believe it, Britt.
It'd be a bummer having to use all those Roman numerals.
Yeah, dude. Yeah, imagine the charting. You know, it'd be crazy charts.
God.
Crazy charts. Hey, shout out to the subscriber. Hey, thank you. None, whatever. As long as you're not Sherbert, you're welcome here. You know. Sherbert, man. A pot of greed. I bought it just to sell it after the earnings call. I don't know if that's a good move. Options might be a little better move for you there, brother. But yeah, an interesting level. Look, let's talk about some levels here for Nvidia. All right, let's talk about some levels, and then we're going to dig deeper into like the EPS and revenue graphs, historic EPS and revenue graphs. So we're going to look all deep into that. I'll say it once, I'll say it again. There's three main talking points for this earnings call. Data center revenue. Obviously, one of the biggest things to talk about. Data center revenue. All right. China sales. Number 2. And outside of that, I expect them to potentially talk about HBM and the effects of supply constraints there. And so we'll see. But Nvidia, look, 241 is the technical high that we've seen over the past 2-3 months here. 241. 241 even, too. It's a big even number. 250 up there is a little bit interesting. Again, we did the math earlier. The implied volatility for Nvidia is about 6.5%. So 6.5% IV, 6.5% relative to where we're at now would put us right around 236, 237. So right around here. If we make a whole 6.5% move to the upside, we will end up right around this level. If it's to the upside, it could obviously be to the downside. And historically, Nvidia has reacted negatively to some of its earnings reports. So it's very possible we go down here, even if like we could see a scenario today. And I think honestly, this is one of the most plausible things. I think we could see a scenario where Nvidia beats EPS by a decent margin, beats revenue by a small margin, or vice versa, and slightly raises guidance, and Nvidia ends up dropping a couple percent on it. I think that's very plausible. I think historically we've seen stuff like that all the time with Nvidia. And so I do think that's a very plausible situation, but I also think it's going to be built on the backs of how data center revenue shows up, whether we hear about China sales and more. So, yeah, I think, again, markets currently price in. This number has actually changed since the last time we looked at it. Markets now currently price in a 95% chance, or 97% chance that Nvidia beats here. A 97% chance. So it's pretty freaking likely right now that Nvidia is going to raise its earnings. Again, $79 billion expected. Yeah. I mean, Micron memory wins no matter what. Yeah, I mean, that's true, Mega How To, man. I honestly absolutely agree with that. I think day one will be green or red. What do you mean, the next 24 hours, Alex? Yeah, stock buybacks are relevant. Nvidia doesn't Nvidia has that little baby dividend. What's the Nvidia dividend? I'm honestly kind of insulted every time I read about this dividend. Let me make sure it's Nvidia that does it. Yeah, Nvidia has a 1 cent quarterly dividend. The audacity of this. Like 1 cent, bro. Look, I'm okay. I like Nvidia as a company. I think Nvidia is going to be fine regardless, no matter what. Long term, if we're talking long term, Nvidia is going to be fine. I think some levels to the downside. I think 210, relevant longer term level. If we're looking at it, 200, obviously, it's a little bit past that 6.5%. But say we have a really bad earnings report here today. Say we have a really bad earnings report. Say we have a really bad earnings report. I expect $200 to be kind of a line in the sand. We've got a lot of historical resistance. It's a big whole dollar number at 200. I expect a lot of people to pay attention to this. You know, $200 underneath this. If we go under $200, it might be a shit show. Yeah. So
I think
it has,
people just meet it with support at the $200 level then.
yeah. Yeah, for sure. I think we could get some buyers stepping in there. It depends on the reason for the drop. Sometimes there's not a reason, right? But if the reason for the drop is a miss in data center revenue, or China sales looking bleak, or a miss in EPS or revenue, you know, I think those are all really bad reasons. And you know, I don't think it's necessarily likely. I think markets are pricing in a 97% chance that we beat and race. And so I think when markets price that in, that's the most probable thing. Yeah, I know why they're doing it. I'm just joking around, Freedom Day Trader. I know why they give us a dividend. But a dividend is better than no dividend anyway, even if it's just 1 cent a share, you know. Yeah, so let's take a look at the EPS graph for Nvidia. Again, Nvidia expecting 178 EPS graph for Nvidia. Let's take a look at what their last quarter one was. So here's Nvidia's historical trends. Very nice looking chart. Growth is slowing a little bit, but it's still doing all right. But their last quarter one was... Yeah, their last quarter ones, let me make sure this is Nvidia, was 76 cents. So they're expecting a pretty big amount over that. Last quarter one was 76 cents, and today they're expecting about 178. So it's well over 100% versus what they did last quarter. What's the percentage? Yeah, 120% year over year versus their last quarter one. So that's a pretty good number. So 178. And again, if we do come in at 100, I expect us to have our largest EPS. You know, if we come in as expected, we'll be about right there. So still a good looking graph, still pretty optimistic. And I expect us to come in higher than 178, 179, but that's what the street expects. Chat right now, what EPS do you think we show up today for quarter one? Quarter one EPS comes in at what number today? Again, it's expected at about 178. Last quarter one was 76 cents. Last quarter was 176. And so what do you guys think we get for quarter one EPS today? Let me know. What do you guys think? Rolling the real dice. 196. I like 196. I think 185 makes sense. I think 185 makes sense.
That's the arbitrary number I was going to throw out.
185?
Yeah.
I don't think it's a bad number. I think 185 makes sense. I think it's over, 178 expected. It's 7-8 cents over expected. It's a decent percentage over expected. I see 190, 184, $2, 180, 196. Yeah, those are all reasonable bets. As long as you don't throw in something crazy like a spike and fade.
$14. I'm kidding.
15. You know.
Oh, okay. Yeah, it's better.
Yeah, that's closer. Right. Spike and fade. Yeah. 185. Yeah, that's my guess. Is 185. You trading aftermarket or the earnings?
I was just gonna pick that because it didn't seem overly optimistic.
Yeah, I think it's fair. Yeah, so last quarter, the recent Nvidia quarter share price falls 5% plus on earnings release. This time will be interesting. Yeah, it'll be fun to watch. We'll see. Again, looking at more data here. So that's their EPS graph. All right, revenue today is expected. Let's see. Yeah, their revenue graph today. So the release could be after 4. It is now 3:51 market time. So it can really drop anytime after the closing bell. Most of the time, Nvidia releases at around 4:20, and it's scheduled for 4:20 today. So most of the time, Nvidia is expected right at like 20 minutes after the closing bell. So we got about 8.5 minutes until the close, and then we'll see what happens moving forward. Anyways, here's their revenue, and again, their revenue today is expected at about 79 billion. Their last quarter one came in at 44 billion, so not quite 100%. Revenue again is expected to come in about 80% versus their last quarter one. Here's quarter one previously here, that came in at 44 billion, but again today they're expecting right around 80 billion. So they're expecting right around here for their next candle. really bad candle, but hey, we're gonna make it work. They're expected right around here for it. If they come in as expected, again, I do expect them to beat. So my guess is like 80. I'm gonna go with like 87, 88 billion is what they're gonna show up today. If they show up over 90, you know, we might run big, but a lot of this is gonna depend on data center revenue, China sales, and more. And so yeah, we'll see what we happen. We'll see what we get, but. Again, the closing bell is only in a couple minutes. This is Q1, fiscal year 2027. AMD dropped the last few minutes. Yeah, I mean, we're going to get into the market on close today. So the market on close data is going to be coming out right now. It might influence it. If we look at Nvidia as we speak here, you know, the market on close data coming out. Hey, thank you, Saudi, for the subscribe. I appreciate it, my friend. Thank you very much. But again, Nvidia is sitting at 223s right now. We're getting a little upward movement. I hear somebody saying AMD is falling down. Yeah, AMD's dipping some. You know, AMD's down to 444s. A lot of these have all been really strong, though. We've seen really strong gains. You know, the reason the NASDAQ, the S&P have been breaking all-time highs is because of the tech gains that we've seen. It's going to 230 tonight. Yeah, 230 is reasonable. I mean, again, we got, what, a 6.5%, 7% implied volatility. And so 6.5% relative to where we are now would be like 230s, 235, you know, 236 or so. It will react in seconds. No, we're gonna cover the earnings when it drops. This is not my first earnings call, brother. The earnings call is at 6 o'clock. The earnings release technically is scheduled for 4:20, but honestly, they could release it any freaking time. Not right now. They're gonna release it after the closing bell. Nvidia is also known to be sometimes late to their earnings report. So we've had late releases for Nvidia's a lot as well here. So we will see. Again, we also have ELF. We have Intuit dropping after the closing bell. You can see markets start to kind of move a little bit. Nvidia is still up 2.8% on the day, though. So NASDAQ is up about, it doesn't give me a percentage, but it's up almost 440.
What do you think AMD is dropping? You think it's just an organic move?
Yeah, I think it's probably market on close data. You know,
okay.
The MOC data probably is what's moving it.
Yeah.
I just want you to yell sell if it's bad. Dude, I'm not an investment professional, bro. I'm not going to tell you. I mean, I'll tell you if it's bad. I'm not going to yell sell because I have no idea. Sometimes, listen, earnings are weird. People think you can sit around, wait for good earnings and just click buy and wait for bad earnings and click sell. Unfortunately, it's not like that. The real move is getting baked in. Again, if we look at Nvidia over 10 days, the real move is getting baked in leading into the earnings report, like in the weeks preceding the earnings report. And so it's very common for a company to, again, beat EPS like Nvidia. Nvidia's beat EPS revenue and raised guidance 6 times in a row, 6 quarters in a row for a year and a half plus now. And it has gone down most of the time after beating EPS revenue and guidance for 6 times in a row. So the real move is happening prior to the earnings release. And prior to the earnings release, we've gone up, which means that markets are pricing in a beat and raise scenario again. If we look at Polymarket, again, Polymarket currently has us what? 96% chance. It's kind of floating between 96 and 97. And so, yeah. We'll see. Yeah, watch out for fake numbers. Yeah, dude, there's a lot of weird stuff that just try to influence markets. 230, maybe 240. Yeah, I guess another question, chat, right now is bull or bear? Bull or bear? We have 4 minutes left into the closing bell. 4 minutes. Maybe 240. Y'all buy? What color Lambos are we buying today? I'm not a big yellow guy. You know, yellow's bold. I'm not a big yellow guy. I would go with, like, black. I'm a big black car guy.
I like
you
purple.
Know? Purple's cool. I'm an LSU fan.
I like yellow, but not on a Lambo, to be honest. I like it more on a Corvette.
Yeah, give me a yellow Corvette. I'll drive that thing, you know?
Yeah.
Anyways, but yeah, guys, Nvidia dropping a little bit at the closing bell today. We have 4 minutes left until the close. Nvidia could release earnings anytime after the closing bell, and we are here for it. So they could drop anytime. Anytime. I see mostly bulls in chat right now. Bear song. Every Nvidia investor knows they're going to beat earnings and want it to just skyrocket, but everyone thinking the way causes the gains to be priced in. And yeah, I agree, Nicholas. I think markets just price in unreasonable optimism. Dare I say irrational exuberance is what markets price in. Shout out to Greenspan.
Dare you?
Dare I, you know. Bears are going to get straight. LSU fan, the car's gonna smell like hot dogs. You better believe it is. Glizzies all day. Glizzies all day. 3 minutes. 3 minutes. All right, so we just went up to this 200 exponential volume. Don't you see the color of these lines? They're purple and gold. Yeah. Streaming is
Those
freezing.
Don't run, my friend.
Yeah, yeah. What room do you think you're in right now, bro? Nah, I'm okay. No, my dad's actually from Alabama. My uncle went to Auburn. You know, Thanksgivings were always really interesting.
Yeah, part of my family was from Alabama originally too, but I'm still LSU. I don't care.
Yeah. They expect Intel to beat. Yeah, we do have Intuit earnings also releasing after the close. Let me prep here. They really could release anytime now. Now you'll know they're out. Yeah, you'll know they're out just because you'll see the movement here. We're going to see some movement from this report. And so, let's see. All right, give me last minute predictions here. 72% of the poll out of about 400 votes think they're going to beat. 16% think they're going to miss. I mean, I think they're going to beat as well here. I think a better question. I'm gonna end this poll right now, and I'm going to do another poll before the closing bell. Are you bullish or bearish on Nvidia today? I'm just going to keep it simple because I think that's a more nuanced question. I think we're probably going to beat and race. But I don't think the direction that Nvidia goes is super predictable unless we miss. You know. All right, guys, we got a minute and a half until close. 50% in 3 weeks. Yeah, bulls are priced in, I think, as well. I think markets are going to be even more strict with it. Again, going back to some crucial numbers to expect here. Data center revenue is the single most important number today, guys. We need over 66 billion to not be a shit show. Really, realistically. Like, we need over 66 billion to not be a shit show for this. If we come in under 66 billion, Nvidia might be falling. Again, it's expected at 66 to 68 billion. For data center revenue. And so, yeah, it's it. It's time. Here, guys. We got 40 seconds left until the closing bell.
Hit the like button again, guys.
Yeah.
Greetings from Germany. Greetings to Germany.
Hey, what's up, Germany?
Hey, hey.
All right, guys. 20 seconds. 20 seconds until the close. What's up, Killing Frenzy, the luckiest man in my chat? What's up, Kyle, GT500, Danielle, Trader Max, what's up, team? All right, guys, here's the closing bell. Right now is the closing bell. Right now. All right, so let's wait. All right, let's wait. We're watching here for Nvidia, guys. We're watching. We're ready. I will do my best to cover it. Yeah, I'm watching. No movement yet, so we're waiting here. Technically, it's scheduled for 4:20, so technically we have another 20 minutes. But I'm watching this like a freaking hawk right now, just because, you know. All right, so we're getting a little wiggle here in Nvidia. Could be closing bell wiggles, but Nvidia wiggling a little bit here. I am going to throw this thing in sub-only mode, guys. So we are now in sub-only mode. Subscribe, though. Hit the notification bell. We appreciate it. Hey, all good, brother. All good, my friend. All right, we're at 223s for Nvidia right now. 223s. Ooh, let's see what we get. No movement yet, so Nvidia earnings are not out. They're not out yet. Nothing yet. Diamond hands. Hey, we're at 223s. Again, the big number today, guys, is data center revenue. Data center revenue. Shout out to all my subscribers. Y'all are made men and women in here. You know. Data center revenue today. We're at 223s. We're wiggling a little bit here, guys. We're wiggling. Nothing yet. All right, we got a little upward action here in Nvidia. I don't think this is the earnings release. It's usually a bigger move. We got a little bit of movement here. All right, so Intuit is out. They posted 1280 versus 1250 expected. 2.2% over expected. Hey, shout out to Trent Spencer, my guy. Thanks so much. Nvidia's up to 224s though, ahead of the earnings report. Technically scheduled for 420. We're up to 224s. Here we go. We're waiting here. 224s. Intuitive numbers are right here. We're going to put these numbers up in chat right now. 420 is the technical time for this, though. But here's Intuit. I think I spelled that wrong. Let me know if I did. Hey, shout out to the subscribe, my friend. Thank you, brother. I appreciate it.
Thank you. Appreciate it. I can feel the anticipation getting to you, John.
I know, man. I'm excited, dude. It's a moment of time right now. It's a moment of time. Beat with strong outlook. Yeah, we're going to almost certainly beat and raise. We've said this over and over again this morning and this afternoon. We're almost certain to beat and raise today. If we don't beat and raise, it will be a shit show. Sorry for cursing. But if we do not beat and raise, you better believe it's going to be a shit show. Yeah. Cobra. Yes. Elf is a bigger story. Of course it's not. Elf is down, what, 65%? Again, I invest in what I understand, and I don't understand makeup. What are the bearish results today? Again, Nvidia very sideways. Hey, shout out to Ilios, my guy. Thanks so much. I appreciate the donation, my friend. We're waiting on Nvidia earnings. What are the bearish results for today? I kind of want a shit show. I might add more if we do. All right, guys. 420. 17 minutes. Do you guys want a timer for 420?
Yeah.
All right, so still just wiggling around here, nothing yet. Again, Intuit's out. They posted 1280 versus 1257 expected. Revenue of 8.56 billion versus 8.54 billion expected. Elf is technically scheduled for 4:05, so Elf should release in 30 seconds, give or take. Hit the live button next to the play button. Yeah, hit the live button next to the play button. Put it in 2x speed, my friends. Take profit locked. We need a 420 timer for multiple reasons. Get your mind out the gutter, chat. Come on now. Be better than this. You know, you're better than that. You know, we got people to see, things to do. Joe Todd, my guy, thank you for the subscribe. I appreciate it, friend. We're at 224s. Nvidia has not moved more than 50 cents since the closing bell. It's really in a stuck range. It's starting to wiggle a little bit. There's Elf. Elf should be out right now. Yeah. All right, guys. Here's the timer. You guys wanted it. You guys got it. It's huge. It's obnoxious. It's here. There's the timer. Nvidia hasn't moved yet. Technically scheduled for 4:20 p.m. Eastern Standard Time.
Also, you don't have to fool people, John. Everybody knows your makeup game is on point.
Dude, I'm great at makeup. I'm great. I can't say I've never worn it, you know.
Me either, honestly.
You know what I mean? Every guy knows what I'm talking about too. Don't take that the wrong way.
Yeah, you always got that one female friend who wants to put makeup on you. It's okay.
Yeah, that's right. That's right. Toenail polish too. It happens. 224s, right?
Yeah,
I got a daughter. I got a daughter as well, so you know, like it's happening. We're at 224s. Yeah. Look at this range here. Markets are waiting. Markets are waiting. Huge pop, huge drop as always. Yeah, we're going to see. Again, we're waiting. Nothing on that. We do have a little red candle here. Again, technically scheduled 4:20 p.m. Eastern Standard Time today. Urban Outfitters is also out today, guys. Again, the big story today is Nvidia data center revenue. Data center revenue, a big story today. A big story today. Again, 66 billion is what we need. It's expected at 66 to 68 billion. We come in under 66, it's bad. It's not good at all. Here is Urban Outfitters. All right, we're at 224s for Nvidia. We're looking a little strong. Still nothing yet on the tape. Nothing yet on the tape. 13 minutes to go.
do you think about Elon's planned orbital data centers? I think that's pretty cool.
Yeah, I think it's something that they're going to be looking into heavily and doing in the future. You know.
Oh
I
yeah,
think
I mean
be
it's
doing
gonna.
this in the future.
I don't know how far off it is. I mean, 5-10 years. I don't know what's feasible, but I don't think it's that far away.
Yeah, I mean, I think they're going to be doing that. Probably faster than that, really. You know, if it'll save them money, they're going to do it. You know what I mean?
Yeah.
All right, so we're up to 224s right now. 224s. 13 minutes. Yeah, a lot of people were wondering if we're going to hear about SpaceX today. You know, so a lot of people were worried, are we going to hear about a SpaceX IPO, some type of deal in the future? 224.30s for Nvidia. Nothing out yet for the earnings report. We're still waiting here, guys. Yeah, Nvidia is the most heavily weighted stock in the stock market. It makes up the largest percentage of the S&P, NASDAQ, and more. So 224s right now. Again, data center revenue is big. China news is big. If China's going to start buying chips, that's obviously pretty big. John, what kind of car do you drive? You want my social too? What about my grandmother's maiden name? You want that as well?
It's Appleseed, you know?
Yeah, that's right. That's my last name. Tsunami is my last name. All right, we're at 224s right now. 224s. Data center revenue key. Crucial. Absolutely important. Their last quarter one EPS showed up at, what was it, like 78-cent EPS. They're expecting 120% of that today, year over year. So 120% of that year over year. Yeah, ELF got absolutely destroyed over the last year, but it's actually reacting somewhat well to its earnings for ELF. So ELF is actually up. It's at 53s right now. We're at 224s. Nvidia's not out yet. We still got 10 minutes. Subaru kind of guy. I did want a STI WRX. Never had one though. Now any EV would smoke it, so it doesn't matter. You know, 10 minutes left, chat. 10 minutes. Yeah, ELF is out. ELF ended up posting their gross margins increased to 73%, so that's probably one of the reasons they're up. ELF ended up posting 449.3, beat 423 million revenue. EPS 32 versus 29. Still nothing though. Again, they're technically scheduled for 420, but again, they have been known to be late on this.
How much has ELF devalued over the last year?
65%, roughly.
Dang.
I sold my house to buy Nvidia. Are y'all nervous? I'm always nervous with earnings releases, especially one like Nvidia that can really just freak markets out, dude. Yeah, markets can just go crazy on this. 10,000 on puts. Let's make a Rolex, please. Yeah, I got this one, man. This one's nice. I don't know what I'm gonna do with this. I might sell this one. You know, I like it. It's probably my favorite watch. I can just never find time to wear it. You know, like I don't know what to wear this with. I don't feel good wearing it with a t-shirt. You know what I mean? I just don't know when to wear it.
Honestly, I would like. I think it looks good. It would look good with just like a casual outfit, just like decent jeans and a t-shirt. Looks good with a fancy watch to me for some reason.
Yeah,
I like the contrast.
I don't know. I always think it's fancier. Anyways, we're at 224. ELF is still heading up though, but it's slightly green. Yeah, this is a Submariner. It's not a GMT. We're at 223s. Yeah, we're at 230. It's starting to wiggle a little bit though. Look at Nvidia. It's wiggling a little bit. I don't think the earnings are out. I don't see confirmation in volume, but look at this drop. We're moving a little bit for Nvidia. Let me check the tape. It's starting to move. Okay, it's starting to move for Nvidia. Let's see. I don't see anything on the tape yet, but this is a big move. Nothing on the tape yet. Do you guys see it? I don't see it. It's not on the tape yet. Just jitters? Could be jitters. I see nothing.
Nvidia needs to hit the NASDAQ with the Bugs Bunny hammer.
We're down at 223s. They get implied volatility about 6.5% today, which would put it at about 230s from where we're at now. It doesn't look like it's earnings. I don't see anything yet on the tape anywhere. Maybe some just insider stuff going on. Yeah, we're at 224s. Yeah, we're up to 223.60s, 223.70s. So it does look like this is it. Everybody's just kind of sitting back waiting here. Technically, we're supposed to have about 7 minutes left here. So it doesn't look like this is it. Paper hands. Did we put it back in sub-only mode? Yeah, we did. Okay, good. All right, we're at 223.50s here. 223.50s. 6.5 minutes. Last minute predictions, guys. Bull, bear on this report. We did a poll earlier. I asked people if they were going to beat. And I think that's too easy of a question just because I think it's highly probable that we're going to beat in race scenario today. I think if you look at Polymarket, that confirms it. Polymarket's got a, what, like 97% chance right now that we beat. 97% chance that we beat on Polymarket. And so I think it's very likely we're going to beat today. But I think a more interesting question is this bull or bearish? You know?
I'm bull hopeful.
You're bull? Okay.
Hopeful.
Bull's fine.
I mean, like, not predicting it, but I'm hoping it.
Yeah, that's fair. 6 minutes, chat. I'm done predicting. Are you refusing to predict? Put bull or bear in chat right now. I'm going to go with bull. I'm going to effectively make my vote on it. I'm going to go with bull. But all right, looking at the chat, we got bear, bear, bull, bear, bull, bull, bear, gigabull. Always kicking wing. Bull
Great
curious.
dirt name.
Yeah, that is a great shirt name. Bull or no house. All right, good luck, Brian. I hope we're bull just for you, brother.
Yep.
Barrow bull. Beat but still up. Neutral. Need bear, feed me bear. Listen. Bear. Bear.
I actually have heard bear's good.
Bull. Solid green. Bear. Beat earnings but flat until tomorrow. That's fair, I think. Freddie says bull, bearish bull, AG Finance, Moon City Committee. What's up, Adam? Really bullish. I think it's going by 300 by Friday. Eternal bull. Beat but drop anyway. I think that's probably a fair prediction. Depends on what we get, but it's still pretty flat here. You saw that big sell order coming through. Who knew? Why? Again, data center revenue, guys. Remember, 66 billion. 66 billion is the number for data center revenue. We come in under 66 billion. It could be a shit show. 66 billion is the number. Chat is the number. So just be careful. Be careful today. Let's see what we get. We're at 223s. Number's supposed to drop in less than 5 minutes now. It's 4 minutes. Up today, down tomorrow. Friday. Nvidia earnings also affects China's stock market. Yeah, I mean, most of our markets affect theirs, and our markets affect the rest of the world too, and their markets affect ours as well. You see things like the Bank of Japan carry trade dynamic and more. So we all affect each other, but ours is one of the more influential ones for sure in terms of markets. All right, guys, here we go. 3.5 minutes left. Again, today, guys, we are expected for Nvidia earnings. We are expected at about 178 EPS on revenue of about 79 billion. 178 EPS, revenue of 79 billion. Data center revenue, which I think is the biggest number in this report today, is expected at 66 to 68 billion. 66 to 68 billion. Thank you, LGD, for the subscribe, my friend. Thank you, brother. 66 to 68 billion, which means if we show up under 66 billion for data center revenue, again, it could be a shit show. Y'all be careful. We have 3 minutes left. We will cover it as soon as it drops. Hit the subscribe button, hit the notification bell. Thanks so much for the support, and let's see what we get today.
And thanks, I think it was S Jack or something like that. Anyway, thanks for subscribing, both of you.
Yeah. Dropping the NASDAQ. Do me a favor, hit the subscribe button, hit the like button, guys. We have 2.5 minutes. And then we're gonna stream the 4 earnings call live at 5 o'clock as well. All right, guys, we're getting a little more of a wiggle here. Look at this drop. So we got some candle showing up here. It's not a big drop. I doubt it's the earnings. Uh-oh, it could be. We're at 223. Nothing out yet.
No, the rest of the market's not moving yet, or at least NASDAQ isn't.
Yeah, I don't see it out yet. Markets are just waiting. Paper hands? Yeah, they could be paper hands for sure. All right, 2 minutes, guys. Less than that.
It's about to hit the fun.
Elf Beauty's going to walk back some tariff price increases amid high gas prices. Bear trap? Brad's first Nvidia earnings? Who's Brad?
It'd be me, I'm assuming.
Yeah. Brad's reasonable. I like Brad. All right, we're at 223s right now. All right, guys, we got 1 minute. 1 minute. You should see a pretty big candle happen. Like when the earnings drop, you should see a pretty big candle happen. We will cover it as soon as it drops. Again, data center revenue is going to be absolutely important. Absolutely important. 66 billion expected today. A beacon of knowledge. Less than a minute here. This is the most important moment of my entire life. It is, because you're here watching beginner trading. You know? You're here.
Your grandkids are going to ask you about this.
They are. They're going to be like, were you watching beginner trading at this moment? And you're going to say yes. You were.
Say, wow.
Yeah.
No, they're gonna
all
say,
right, guys. Yeah, whoa. I watched Nvidia earnings. 25 seconds left.
Yeah,
here we go. Again, expected at 178 EPS, revenue of 79 billion. 178 EPS, revenue of 79 billion. Data center revenue expected at 66 billion here. 66 billion. All right, look, let's watch for it. I'm going to zoom out a little bit just to catch the move here. 224s right now for Nvidia. Here we go. Hey, thank you for the donation, my friend. Here we go. 5, 4, 3, 2, 1. Hit the live button next to the play button if it doesn't show. Let's see the movement. All right, look, a little bit of red. We're wiggling a little bit here for sure. All right, we are down on this earnings report. Let's see what happens. All right, guys, we're at 223s right now. 223s. $175, 78.9 billion for Nvidia expected. They're not out yet, though. We're waiting here. But they are down from this report. All right, we retraced all the way back up. Okay, Nvidia, 187 versus 175 expected. Revenue of 81.61 versus 78.8 billion. We're going to put these numbers up on screen. Nvidia is out. It beat EPS in revenue. Yeah, these are the numbers right here. The numbers right here on screen. You can see them on screen right now. Again, they beat EPS and revenue. We got to look for data center revenue. Yeah, we got to look for data center revenue. But they are dropping down from this. They're dropping down from this. Let's see if they hold. They're dropping down. Not much of a beat. I think markets wanted more. Look at this. We're down to 218s. Right now, 218s. All right, so let's dig deeper into this earnings report. Yeah, so again, Nvidia numbers are out. And they beat EPS and revenue by a small margin. It wasn't a huge number like they wanted. But they beat EPS and revenue. 187 adjusted EPS versus 175 expected. Revenue of 81.615 billion. 81.615 billion here. So Data center revenue, 75.2 billion. A pretty good number here too for data center revenue. Record data center revenue, 75.2 billion, up 92% year over year. They announced an 80 billion additional share repurchase authorization and increased their quarterly cash dividend from 1 cent a share to 25 cents a share. They see quarter two guidance numbers. Top of the range is now 92.92 billion versus about 86 billion expected. So they beat and raised. They had good data center revenue. They raised their dividend. And they're still down pretty significant amount. And this is what we see here a lot of the time from these earnings reports. Again, 66 billion was expected for data center revenue. I'll put these numbers up on screen, but 66 billion was expected. We ended up showing up at 75 plus billion, up 92% for data center revenue. Sales guidance, quarter two sales guidance was raised as well. Data center revenue, again, 75.2 billion, better than expected. Yeah, and we are dropping. Is this the buy the dip scenario, chat? Buy the dip scenario. Again, earnings are not predictable. The move happens prior to the actual report. This is something we tell people a lot. The move happens prior to the report coming out, not during it. All right. But again, these numbers were very good. Very good. Again, 75.2 billion data center revenue. They expected 66 to 68 billion. They raised their quarterly dividend to 25 cents. They had good guidance numbers and raised guidance. They beat EPS, they beat revenue, but markets wanted more. Now, it's still early here, chat. It's still early. They are down from this report. It's still early. They are down from this report. But yeah, markets wanted a little bit more here, guys. They wanted more. And yeah, we are now at 2/18 for Nvidia. Is this a buy the dip scenario? Is it time to buy the dip? Hey, shout out to Kaz for the donation. Why I'm neutral on the Mag 7 was a thing when Tesla went kaput, Microsoft then went kaput. Next one was Nvidia, Google, AMD, Intel would be last to go. Hey, thank you for the donation, my friend. I appreciate it, brother. Is this a buy the dip scenario? Put yes or no in chat right now. Buy the dip scenario, yes or no? Again, Nvidia sees quarter two revenue at 91 billion plus or minus 2%. So they raised their quarter two revenue guidance. They raised their EPS guidance. They came in much better than expected for EPS and revenue. They raised their dividend. They came in way better than expected for data center revenue, which was the biggest margin, or which was the biggest number here, chat, was the revenue. And so they did way better than expected. And they are down from this report. We are now back up, though. We're now technically green on the day again. We're back up to 221. Remember, the implied volatility move was 6.5%. We are now at 222s here. Chat, 222s. So I asked people, is it time to buy or sell? People are saying, yes, pump it. Yes, but I'm all in. Buy it. Here it comes. Yes, no. For long-term, all scenarios of buy for Nvidia. I kind of agree, Blaze. Buy. Nope. It will dip more tomorrow. Indeed. No. Yes, yes, yes. They say, hell no. They raised the dividend per share to 25 cents. I know. I was just complaining about it. Maybe they did it for me. I was complaining it was 1 cent a share. I was insulted by the 1 cent. Now it's 25 cents. That's a pretty good dividend for Nvidia. You know, under, you know, $200 something stock, 25 cent divvy is pretty good, honestly.
They're trying to get insulted 25 times.
Yeah, that's right. That's right. Yeah, we're starting to come back though here. We're starting to move back up here, chat. And again, we will be doing the earnings call live at 5 p.m. So let's do a countdown for the earnings call. All right, so we're back up. We're about to go green from this earnings report. Again, we are at 222s right now, 222s. Also, guys, for those that aren't here, give your boy a follow on x.com at Beginner Trades. We appreciate it. Here's the link. Check it out. Here it is. They'll be $300 in a year. I agree. I think, look, I think Nvidia is the king of chips, and they're going to be fine. And they're the obvious leader in chips. They've got the most hype. They've got the most attention. And AI is going to grow, chat. AI is going to grow. Regardless of whether you want it to grow or don't want it to grow. I think people fear AI, so they have all these pessimistic views regarding stocks and AI. I disagree. I think if you look at how much better AI has gotten over the last 5 years, and you extrapolate that over the next 20, it's going to be crazy freaking big. It's going to be so much better than it is now, and that's good for Nvidia. That's good for Nvidia. And Nvidia is up to 223s right now. It's trying to go green from this earnings report. It's still technically a little red from it. But again, I think they killed it with these earnings. 187 EPS versus 175 expected revenue, 81 plus billion, their highest EPS and revenue quarters ever. I think they did great. I think they great. I think they're doing great. Let's dig a little bit deeper into this earnings report, though. So, again, 80 billion share repurchase authorization. That's great as well. 80 billion.
Some people say that's a lot.
That's chump change to me, Britt. What 80 billion, dude? Give me 85 or I send it back, dude. You know what I mean?
Absolutely. I mean, I use that much for printer paper,
Right. Yeah, I spent that much on toilet paper last week,
you gotta change your diet.
Yeah, that's definitely true. That's definitely true. All right, guys. Yeah, so we got a countdown timer. Yeah, we got the countdown timer. Let's see what happens. To the moon? Yeah. Again, we're now effectively green from this report. Just to kind of read some of the stuff in here, Nvidia is not assuming any data center compute revenue from China in its outlook. We'll have data center and edge computing market platforms. GAAP and non-GAAP gross margins are expected to be about 74.9% and 75% respectively. So those are good margins for Nvidia, plus or minus 0.5%. They said they're transitioning to new reporting framework that better reflects current, future growth drivers. They expect fiscal quarter two revenue at 91 billion, plus or minus 2% versus estimates at 87 billion. Again, record revenue growth, or record data center revenue. We again expected at 66 to 68, and this was the big number. We showed up at 75.2 billion versus 66 billion, 68 billion expected. Way better than expected there. Hyperscale and ACIE is going to report within data center. Edge computing highlights devices for agentic and physical AI. Quarter one edge computing revenue showed up at 6.37 billion. So these are all pretty good numbers for Nvidia. I don't see any numbers that are necessarily bad here. Obviously, the data center revenue is the biggest winner at 75.2 billion. But I don't see any of this is necessarily bad right now. Gotta catch back up with the chat. Nvidia guidance, so quarter two guidance, I'm sorry. At 89.18 billion revenue. Or 89 to 92.92 billion in revenue, expected 86. So our bottom range number now is greater than the previous number at 86.262 billion. 92.3 billion at the top, or 93 billion roughly at the top range of quarter two sales. So yeah, we raised guidance as well. 91 billion plus or minus 2%. 80 billion share repurchase. Raised the quarterly dividend to 25 cents versus 1 cent. Record data center revenue. And now we're pretty green, which is expected. We're at 226 here. They say the Vera Rubin is on track for the second half of this year, starting in quarter three now. Quarter three. So yeah, Vera Rubin now expected starting in quarter three of this year. And we are up there, man. Look. So. Yeah, but this is a good report. Let's see their quote. They said the build out of AI factories, the largest infrastructure expansion in human history, is accelerating at extraordinary speed, said Jensen Huang, founder and CEO of Nvidia. Agentic AI has arrived, doing productive work, generating real value, and scaling rapidly across companies and industries. Nvidia is uniquely positioned at the center of this transformation as the only platform that runs in every cloud, powers every frontier and open source model, and scales everywhere AI is produced, from hyperscale data centers to the edge. During the first quarter, Nvidia returned a record level of 20 billion to shareholders in the form of shares repurchased and cash divvies. As of the end of the first quarter, the company has had 38.5 billion remaining under its share repurchase authorization, and they approved 80 billion buyback, raised the quarterly dividend from 1 cent to 25 cents, and had pretty good numbers all the way around here. So, bring the robots. That was the biggest bear bait in history. It always is, brother. It always is, dude. Like, it's always a bear bait here. Like, they're always scared of... Like, they're always scared. The bears are always scared. You know? Yeah, they're always scared. So, yeah, we got the earnings call at 5 p.m. Yeah, Elf. Where's Elf at? Elf has kind of turned back around here. It's at 54.5s, but it's trying. It's trying. Hyperscalers are the bread and butter of robots. And I do believe the next big money pull, look at the market start to come down a little bit for Nvidia, though. I do believe the next big money pull in markets is going to be robotics, obviously. Not necessarily even just humanoid. I think just in general, AI-powered robots, obviously, is the future. And that's what I'm putting my money in the future. Yeah, people are saying, hey, why is Nvidia coming back down a little bit? It's because the real moves from earnings, chat, happened prior. Like, look, here's a 10-day chart. We've made some pretty big moves over the last 10 days. We broke all-time highs numerous times, 241 all-time highs now. And so this is where the big move is happening. This is where most people are getting baked into stuff, is here. Again, we're at 222s. We'll see what happens. We will stream the entire full earnings call live, but this is what's going on. We're at 222s right now. We'll see how quarter two does. Bro, my phone is a ring in here, dude. Bro, I got added to a group chat, dude, and like I don't even know what to do with this group chat, bro.
It's annoying when I get caught up in one of those.
Yeah, dude. Like, and the people in this group chat don't sleep. They don't sleep. Like, what are y'all doing? Like, they were sending group texts at like 2 a.m. They're not even to us. Like, I'm gonna mute you for 24 hours, dude. Sorry, guys. If you're watching the stream, I'm sorry. Love you guys. But y'all are muted right now. Thank you, John. Hey, what's up, dude? Thank you, brother. I appreciate it. Yeah, hit the subscribe button, guys. I appreciate all the subscribes today. We're gonna stream the entire earnings call. We got 26 minutes left. But this is a great earnings report for Nvidia. This is a great report. Every tech ETF, yeah, NASDAQ powered by Nvidia. If you look at the NASDAQ here, we're at 29,318s here, 29,318s. So the NASDAQ, when did the earnings drop? The earnings came out right here. So the NASDAQ is effectively green from this. Earnings dropped right here on the NASDAQ. So we're green. Kind of an underwhelming move, though. But I thought the report was great for Nvidia. I just think markets already priced this in to a certain extent. You know, earnings report came out here. We're basically completely flat from this earnings report so far. Great earnings, awful price trajectory. Yeah, we'll see what happens tomorrow in the next 24 hours. I'm waiting for the PDT rule to end. Yeah, what is it, end June 4th? Yeah, June 4th or so is when it ends. Something like that, June 4th. Someone get the bear spray. Dude, the bear spray is out, brother. The bear spray is out, dude. You know? The bear spray is definitely out. I think this is a great report. Honestly, even with the moves we've done in the last 24, 48 hours, I think this is a great report. Are y'all bullish or bearish on Nvidia right now from where we are right now over the next week? Buy or sell Nvidia over the next week? Let me know. Bull, bear, buy, sell. It's all the same. Let me know in chat right now. What do you guys think? Wait until we have peace in the Middle East. Yeah. Again, I think the great numbers, that data center revenue, dude, coming in at 75.2 bill. It's a pretty good margin, pretty good number. Yeah, they said the Vera Rubin was on track for quarter 3. All right, I'm looking at it. Bear, sell, neither. Overextended. Honestly, flat AF. Big sell-off. Bull. China canceled Nvidia chips. Buy, sell. Buy DCA. Bull. Bullish. Sell. Bullish. Buy. Bullish. Sell. Notoriously known for selling into the month following earnings. Bullish today, bearish tomorrow. Depends on oil. Overextended on the upside. I do not know. The whole economy is going off AI. Bear. Yeah. I mean, I'm bullish over the next week. I think these are good numbers. Now, it depends on what they say during the earnings call. The earnings call can completely take this the other way, to be honest. Like, we could see, like, the earnings call take this the other way. But, you know, nonetheless, like, it's pretty good. It's pretty good. I think the numbers were all pretty good. I didn't see any bad numbers here, any disappointing numbers. I think you could maybe argue that the EPS only came in about 10 cents over expected. You know, so, like, maybe you could argue a disappointing EPS print. Maybe. Revenue came in, you know, like 4 billion over expected, almost, not 3 billion over expected. So the revenue number was pretty solid. EPS, maybe you could say it wasn't good enough. What was this, like 5% better than expected? Maybe markets wanted more. That's the only thing. I think data center revenue was great. Why do you think the PDT rule is changing? I don't know. I think maybe, I don't know. We're in a powerful trend, definitely bullish. Look at the after hours supply digital. It's crazy how they hold back Nvidia. They smash earnings and earnings tank. They smash again today flat. I don't think they're holding it back. I think most of the moves are happening. Again, look, here is a 20-day chart on Nvidia. Nvidia's up a lot over the last 20 days, brother. So Nvidia has made some moves over the last 20 days. I thought the margin was 75%, Leo. But the point is, Nvidia, again, chat, I wish earnings were as easy as sitting around waiting for a company to beat and raise and just blindly clicking buy. I really wish it was like that. I really wish I would be rich. I'd just sit around, wait for a company to report earnings, buy a bunch, and then sell into the strength. I wish it was like that. Unfortunately, the real moves happened prior to the earnings release. And so, you know, the moves are really getting baked in prior to the release. It's a mix of insiders versus, you know, people knew Nvidia was beating and raising, and so maybe they wanted more. I thought these numbers were pretty good. Maybe you could argue EPS was a little bit under, you know, what it was better than expected, but still less than people wanted. It wasn't that big blowout EPS number, but EPS is margins, and, you know, I don't know. Yeah, I don't ever gamble earnings. I'm not buying anything just from earnings. The variance is so freaking high. Like, I'm not just buying up huge option contracts ahead of earnings looking to get rich. No offense if you're doing it. Live your life. I hope you make money doing it. I'm getting too old for that, bro. I'm getting too old.
Don't say that, John. You're only as old as you feel.
Right. You know, I look pretty good for a 60-year-old. Pretty good, you know.
Yeah, I mean, I would say so.
Yeah. I predicted it would go up, then down, then big up. Hey, I hope you're right. People invested in Nvidia a long time ago, barely care about these earnings. Yeah, regardless of the good numbers, market might pump short term, but dump eventually because inflation. Yields are possibly the signal to watch. Where are yields at? Yields, I know they went up a lot over the last like 24 to 48 hours, and then it looks like we're going to get a potential Iran deal done, and so then they fell back down. We had the Fed minutes reports that we streamed earlier, and the Fed minutes report was more hawkish than expected. You would think yields would spike on the hawkish sentiment, but maybe markets price that in as well. I think if you had to look at the FOMC minutes report, I told people ahead of time, I expected to be hawkish. How are they going to be dovish? Oil's up so much. How is the Fed going to be dovish in that inflation or in the FOMC minutes report from the last meeting? I just didn't see any way they were going to be dovish, and it wasn't dovish. It was a hawkish report. Looking at yields right now, though, here's yields. 5-day chart on yields. Yields are down a little bit. You know, we have what's called, I think the president called it a letter of intent from Iran that says they like let's get back to the negotiating table. Oil has fallen a little bit on that news. Yeah, oil's down on that news today. But this is like the third or fourth one that we get. Hey, thank you, Darren, for the donation. Appreciate the news. You're beating Bloomberg. I'm gonna try to pronounce this. You're beating Bloomberg's cock. Sorry, young people. You know, sorry. Family-friendly stream just ended. It's C-A-C-K. It wasn't the I was thinking like a bird. You know, like caw. You know, it's
okay. You just gotta say it like you're from Chicago or the Eastern Seaboard, and then it works.
That's right. Like, give me the car keys, right? Yeah, exactly. Yeah. I got you. But thank you so much for the donation, brother. I don't know how much money that is. I don't know how much money that is, but thank you, bro. Thank you. That is $14, my friend. Thank you, brother. I appreciate it. Shout out to that guy. John, there's children trading here. I'm sorry, guys. I'm sorry. My virgin ears. I'm sorry, Vegas. I know, like, I thought about you when I said that, you know?
Yeah, man. You made me clutch my pearls, you know?
Yeah. The vibe I get from you, Vegas, is virgin ears, you know? I'm like, you know what? That guy's got virgin ears. But thank you, brother. I appreciate it. Yeah, anyways, the 25-cent divvy. Who's buying Nvidia for that 25-cent divvy? You know?
You know I am. I need that 25 cents.
That's a pretty good dividend, honestly, for Nvidia. This guy's cool. I follow him since 2020. Thank you, Lewis. I appreciate it, brother. Thank you, sir. Uh-oh, look what song it is. This is my theme song now. I hated it. Now I love it.
I still hit.
Amazon just pumped. Yeah, let's see what MU's doing. AMD. They're all kind of trailing Nvidia. Like, the sympathy movement is real right now. Alright, guys, we got the earnings call in 18 minutes, though. Nvidia looks like it wants to hold. I believe it wants to hold here. I believe it wants to go up. Yeah, I believe it wants to hold. No idea, pumped and umped. I'm here for the song. I knew it. I play the song, everybody comes out, you know. It's like my bat signal right now.
DJ Johnny Supreme.
That's right. That's right. Ping pong champ. Nvidia at 223s right now. 223s. Music is too loud, bro. Is it? All right. Let me know if that's better. Love the song. All right, guys. Again, just a recap. We have 16 minutes until Nvidia earnings. 16 minutes. Nvidia earnings came in pretty good. They beat EPS by about like 5% beat in EPS. Revenue came in about $3 billion over expected. Data center revenue came in at $75.2 billion. They expected 66. They came in at 75. So well over 10% beat in data center revenue. They raised guidance on every front. Their margins were good. Vera Rubin is looking like Q3. So good updates there. And yeah, I don't really see anything bad from this report. Now, maybe Jensen's going to come out here and say some craziness. I don't know. I can't remember the last time Nvidia didn't sell off after beating the last two earnings. Same as this one. Yeah, well, we definitely sold off originally. You know, but I think maybe algorithms are just getting baked into that type of outcome here. We've moved up a lot again over the last 20 days. 20 days ago, we were at $200. We're now at 223s. You know, so we're like 11 or 12% over where we were. We're up 11 to 12% in the last 20 days for Nvidia here. So that's a pretty big amount. That's the market getting baked into a positive report. And the report was positive, but again, at this point in time, we're up 11+% in 20 days. That's a very big amount. So maybe markets are just, maybe profit taking's happening. And that'll get baked in too. And then maybe we'll get another leg up. We'll see, you know.
Did you trade any on the earnings report?
No, I'm not going to trade it. I just sit in it, you know. Option might get crushed. They usually beat by more, though. Yeah, no, that's what I was saying. I think EPS looked a little weak. Revenue was good. I think EPS 5% or so greater than expected was not the big beat people wanted for EPS. It's better than a miss, right? It's better than if we showed up at, what do we show up as for EPS? We showed up at like, what, 187? It's better than if we showed up at like 1.65 or something. That would really be bad. But I think the data center thing is optimistic. I think revenue was better than expected. EPS was better than expected. You got to say, most people expected revenue 1.7 to 1.75, 1.78. So showing up at 1.87 is better than expected. You got to have reasonable expectations, I guess. Forward guidance was good. They raised forward guidance, Alex, on both fronts. So revenue guidance was raised. So yeah, they raised it on both fronts. They did a 80 billion buyback, which is a huge one, and they also raised their quarterly dividend from 1 cent to 25 cents. All good for stock.
I did trade the earnings report.
Oh, you traded the Nasdaq?
Yeah.
How'd you do?
Ended up breaking about even. I didn't lose anything.
Yeah, that's good. Johnny Smooth is his name, Pew. Yeah. That's good. Ugh. You guys red or green on the day today, guys? Red or green on the day?
Green. What about you?
Green. I think I'm pretty green. Yeah. I have to go check. You know, this morning the New York Open was another life right now with Nvidia earnings today. You know, I don't even know what's going on there. You know, I don't even remember what happened. You know,
I think I'm up. I don't remember where this eval account started me at.
Yeah, red, green. Red, green, red, bro, green, green. No major news the rest of the week. Bearish until Tuesday. We got jobless claims unemployment tomorrow at 8:30. We'll be streaming that live as well. Green is grass. Hey, grass is green, sir. I made a whole $1. Green is good, my friend. 5.5 trillion market cap. It needs to be perfect.
Better than losing.
Yeah, I know, I'm good. Red. The stock is right here. This is what's called after hours. You know, the stock market has a couple of main times. They're saying 24/7 trading is going to be coming through. But we're in what's called after hours session right now.
Are there certain stocks I'm not allowed to trade on an eval?
Nvidia hit all-time highs of 212 60 months ago. All other ships up. AMD up 80%. Nvidia lagging. Yeah, Nvidia's been lagging though. Some of that is from some of that is from the memory gains that we've seen, but Nvidia has lagged behind. Nvidia's been, prior to the last 3 weeks or so, Nvidia had been flat since 2025, in July of 2025. So we had this really sideways range in Nvidia for a long time. And I think one of the easiest trades was just to wait for it to break out of this range, you know. I think a lot of people were kind of shocked, though. I don't think as many people took advantage of this as they could have, because I think we're in the middle of the Iran conflict, surging inflation. Like, we streamed PPI and CPI inflation last week. It was a shit show. Like, that was terrible. Like, it was all bad. CPI 3.8% year over year. PPI was 1.3 or 1.4% on the month. You know, that's a crazy print. Way like 100% more than expected. And eventually wholesale prices creep into consumer prices, right? And this is all from the Iran conflicts, the first and secondary effects of it. And so simultaneously, we're also breaking all-time highs. You know, oil's up to over $100 a barrel, or at least it was prior to today. Stock market's breaking all-time highs. And so it's just been a really interesting 6 months, you know, really. Really 3 months. But yeah. That's the kind of what we're in now. But we are up. Again, implied volatility today was 6.5%. We're really about flat from this report. You know, the earnings report came out right here, guys. It came out right here. So we're slightly down, but basically flat. Basically flat. So. Yeah, Intuit got hammered. Intuit had a super dump. Look at Intuit from its earnings. AI just eating their lunch though, dude. Like AI, Intuit seems like the biggest like at-risk company for AI. One of the biggest. You know, like you got tax accountants now, you got tax everything. Or you got AI accountants now, you got AI all kind of stuff. So Intuit just AI's bad for them for sure.
What about Bird?
Bird, man. They are not as high. They were big. Again, Bird was a company that squeezed here, and the reason they squeezed, this is like a environmental flip-flop company that makes environmentally good flip-flops that don't take advantage of the environment, guys. You know, they announced they're pivoting to AI. They're like, you know what? F the environment. Let's get rich, is what they said. And this thing ripped up to $24 a share. It was never gonna hold. They're like, screw that, let's get rich. You know, we're pivoted to AI. They immediately filled the gap, but they went up to $24. I bet you a bunch of traders lost a lot of money here. You know.
I mean, I'm not laughing at people losing money. I'm just laughing at the whole stock.
It's a funny story. You know.
Yeah.
Hey, James, stop spamming, bro. I'll put you in timeout for a minute just because you spammed it about 10 times just now, bro.
And because your syntax is bad.
Yeah. Oil sneaking up. Yeah, James, chill out, dude. All right, guys, we got the actual earnings call going live in 9 minutes. 9 minutes. Let's see what we get. I'm ready for it.
What do you think we can expect from this?
I don't know. I think China's going to be on a lot of people's minds. I think we know the base numbers, but I think China's going to be important. Like Nvidia just went to China, or the Jensen Huang just went to China to try to really they went to try to talk them into buying Nvidia chips. I still don't know if China's going to do it, but I think hearing from Jensen on that topic is going to be important. Remember, Samsung was about to strike, or workers at Samsung were about to strike, and that was going to put a halt to some of the really important aspects of Nvidia chips. But that strike got resolved. Look at Elf right now. That strike got resolved at the last minute, and so it doesn't look like that strike's happening anymore. So that's good. Look at Elf though, guys. Elf just dumped. Again, we're at 222s, right now 222. Anthropic expects 130% revenue surge to 10.9 billion in the June quarter in its first operating profit, according to Wall Street Journal. Also, SpaceX files an S1 filing for upcoming IPO on Nasdaq with the ticker SPCX. It'll have Class A and Class B shares. So SpaceX IPO is coming. This earnings call deserves a wee dram of good bourbon. Was that a pun for DRAM memory? Are you talking about SanDisk? You know, SanDisk at 1400. Or did you just misspell something? Short bait here. 25-cent divvy? Yeah, that's a good divvy. I'll take it. Gamblers? Definitely gamblers. Look at this. That might be my new nickname. If Starship blows tomorrow, no SpaceX IPO. Stock showing laxatives.
Yeah, forget Kenny Rogers. You're the gambler, John.
Yeah. If there's anything I am in life, it's a gambler. You know. All right, guys. Bull or bear on this earnings call? Let me look at our poll here. I asked people are they bullish or bearish on Nvidia. We got over 1,000 votes. 68% said bullish. 68%. I'm bullish too, I gotta say. I mean, I'm not necessarily saying we're gonna go up over the next week or 2 or 3 or month or whatever, but I think long term, obviously good company. When you extrapolate the growth of AI that we've seen over the last 5 years over the next 20, AI is gonna grow a lot, and that's good for Nvidia. And so, and I think the numbers today reinforce that bullishness. Again, good data center revenue. Over 10% better than expected. BDPS, even though it wasn't by the best, like it wasn't what people wanted, but it was still a beat in the EPS. Revenue came in good as well. They raised guidance, so they beat raised. They had good data center revenue. We'll see what they say though. Nvidia started to dip a little bit. We're at 221. The previous closing price, the point at which it goes red to green on the day, is 220.61 right now. At this point, would you guys be buying Nvidia stock? I'm not an investment professional, bro. So I'm not telling you to buy it. Depends on the time frame. Long term, I think it's pretty clean. I'm not an investment professional. I might be wildly wrong about this, and maybe Nvidia crashes. But I think long term, it's an easy buy. You know, not telling you to do it. I have no idea what it's going to do. I might be wrong. You know, we might be wrong, but. People are trying to find a DRAM. The only DRAM I know is memory.
Pretty sure a DRAM is a liquid measurement, the way he's talking about it.
Yeah, I know. I've had about 5 people, you know, define it for me.
Oh, well, I did not. I was looking at the...
Hey, Ahmad, thank you for the donation, brother. Thank you. Thank you for the donation, friend.
Thanks, man.
Or not the donation. I mean the subscribe.
Much appreciated, man.
Yeah. All right, so I see. Are you bullish or bearish on the earnings call? Most people are bullish at this point. Julius with a pin of shame. It will pull back. Man, long term it's easy, amazing investment, but who knows? But now who knows? Yeah, short term you never know. I mean, short term anything can happen. ASIC usage is growing a ton in AI, and Nvidia doesn't really do that. Google does it the most. I like Google too. I sold a little bit of my target today, but I'm still in it. What did Target end up doing? It's at 121s. Okay. All right, let's get the call ready. We're ready with the call, guys. We're ready with the call. Yeah, 80 billion buyback for Nvidia is great, obviously.
Excuse me.
Yeah, we're here. We're waiting. I might have to turn the music off, but we're here. We're waiting.
What do you think about the growth of MU? I don't know.
What do I think about the growth of MU? Memory play. Memory's really expensive because of data centers. You see SanDisk and MU grow crazy. I remember MU when it was like $50 a share or something like that. So I've watched it grow from a little pup up to the memory giant it is today. So I don't dislike it. All right, guys. If I had to invest from now, I'd pick Google. I like Google. I like Amazon a lot. I'm in Amazon, but Amazon's been breaking all-time highs. But I think it's really hard for any business to eat Amazon's lunch anytime soon. So. Yeah, I'm in Amazon at 190s. Feels pretty good. It's at 270 right now. Yeah, we'll see what the SpaceX IPO looks like.
And I'm going to preface this with I might be wrong, but I read somewhere that SpaceX was predicted to be the heaviest
biggest IPO of the year. Yeah, that's true. 100%. SpaceX, OpenAI, right now, the two big ones. All right, guys, the earnings call's about to start. I'm going to turn the music off because we have about a minute until this thing's going to start. So just stick with me. Hey, thank you for the donation, Lino. I'm going to have to mute those sub donations, though, while I'm streaming. Just because... Yeah. All right, guys. We got the earnings call. We're ready.
Yeah. Thanks, Leon. Yeah, everybody take his advice, request, whatever, and hit the like button for us, please, before the earnings call.
Yeah, hit the notification bell. Hit the like button. We appreciate it, guys. We appreciate it. Yeah, Lisa Sue. Goated. Yeah. All right, guys. Here we go. Yeah, here's Nvidia. My bad. Yeah, the call's about to start in 25 seconds. I have to figure out how to... Yeah, Brent, I'm just going to hang up with you during the call, so because the call's going to be playing, you know.
Yeah, that's fine.
I'll maybe pull this up here. Get the call ready. All right, here we go. Here's the call. I know you can't hear it yet. I got you. Still waiting.
Good afternoon. My name is Sarah, and I will be your conference operator today. At this time, I would like to welcome everyone to NVIDIA's first quarter earnings call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. If you would like to withdraw your question, press star 1 again. Thank you. Toshiya Hari, you may begin your conference.
Thank you, and good afternoon, everyone. Welcome to NVIDIA's conference call for the first quarter of fiscal 2027. With me today from NVIDIA are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. Our call is being webcast live on NVIDIA's Investor Relations website. The webcast will be available for replay until the conference call to discuss our financial results for the second quarter of fiscal 2027. The content of today's call is NVIDIA's property. It can't be reproduced or transcribed without our prior written consent. During this call, we may make forward-looking statements based on current expectations. These are subject to a number of significant risks and uncertainties, and our actual results may differ materially. For a discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, May 20th, 2026, based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. With that, let me turn the call over to Colette.
Thank you, Toshiya. We delivered an exceptional quarter with revenue, operating income, and free cash flow exceeding our prior records. Total revenue of $82 billion was up 85% year over year and 20% sequentially. This marked our third consecutive quarter of year-over-year acceleration and the 14th straight quarter of sequential growth, a significant feat given the sheer size and complexity of our manufacturing operations. The $13.5 billion sequential revenue increase was also a record. We capitalized on the inflection in inference demand by ramping Blackwell systems across our diverse end customer base, from hyperscalers to model makers to AI cloud providers and sovereign customers. In Q1, we also allocated capital effectively across R&D, investments in our ecosystem, and share repurchases. We returned a record $20 billion to our shareholders while executing strategic investments, both upstream supply chain and downstream go-to-market ecosystem. This is critical to the market's development and our long-term position. Data center revenue of $75 billion was up 92% year over year and 21% sequentially, driven by sustained strength in our Blackwell architecture. And demand for GB300 and NVL72 was particularly strong, with frontier model builders and hyperscalers each having cumulatively deployed hundreds and thousands of Blackwell GPUs, marking the fastest product ramp in our company's history. Grace Blackwell is the fastest training system as well as the lowest token generation cost at inference. Spectrum X, our end-to-end Ethernet platform purpose-built for AI, is now larger than all Ethernet network peers combined. InfiniBand has also had a very strong quarter, growing more than 4x year over year, driven by deployments of our next generation XDR technology. For your models, data center computing revenue of $60 billion was up 77% year over year, while data center networking revenue of $15 billion nearly tripled year over year. Before we deep dive into data center, we'd like to brief you on our transition to a new reporting framework that better reflects our current and future growth drivers. We have two market platforms, data center and edge computing. Within data center, we will report two submarkets, hyperscale and ACIE, which incorporates AI clouds, industrial, and enterprise. Hyperscale will include revenue from the public cloud and the world's largest consumer internet companies, while ACIE addresses our growth opportunities in diverse AI purpose-built data centers and AI factories across industries and countries. Edge computing highlights devices for agentic and physical AI, including PCs, gaming consoles, workstations, AI RAN base stations, robotics, and automotive. For your reference, we have posted on our website a revenue breakdown based on our new platforms for the past 9 quarters. Moving back to our data center results. Hyperscale revenue of $38 billion was approximately 50% of data center revenue and increased 12% quarter over quarter. ACIE revenue was $37 billion and grew 31% quarter over quarter, including AI cloud revenue that more than tripled year over year. Our customers have enabled rapid stand-up of AI compute capacity The number of partner data centers exceeding 10 megawatts has nearly doubled in just 1 year, now surpassing 80 sites. Sovereign revenue increased more than 80% year over year. NVIDIA AI infrastructure is now deployed across nearly 40 countries, representing 50 trillion in GDP. As evident to our Q1 results, our customer base is diverse and growing, supported by our vast ecosystem and installed base, breadth of CUDA accelerated application, and the lowest token cost provider. We are well positioned to address a market opportunity that far exceeds that of any other AI computing platform. Demand for AI infrastructure continues to expand at an unprecedented pace. The build-out of AI factories is accelerating. The value of NVIDIA AI infrastructure is rising. The price of renting an H100 has risen 20% year to date, while A100 cloud pricing is up nearly 15%. Benefiting from the versatility of our platform and continuous performance enhancements enhanced by our software stack, customers are generating profitable revenue beyond the depreciable life of their GPUs. The vast and trusted marketplace for NVIDIA compute is a critical foundation on which billions in AI infrastructure spending is being financed by the ecosystem. There are two primary drivers behind the accelerating build-out of AI infrastructure. First, from search and advertising to recommender systems and content understanding. The largest hyperscale workloads continue to transition from CPU to GPU-based accelerating computing. Second, the adoption of products and services native to AI is inflecting. Since the advent of ChatGPT, we have witnessed mainstream AI transition from one-shot inference to reasoning and to now agentic. AI is no longer a nice to have. AI is now a necessity for enhancing productivity across all industries and roles. This is propelling revenue acceleration across all layers of the AI cake, including energy, chips, infrastructure, models, and applications. Growth in the model layer, particularly at Anthropic and OpenAI, has been incredible, with momentum continuing to accelerate, including breakout growth in OpenAI's Codex since the launch of GPT 5.5. With analysts now forecasting hyperscale capex to exceed $1 trillion in 2027 and agentic AI beginning to proliferate all industries, AI infrastructure spending is on track to reach $3 to $4 trillion annually by the end of this decade. Our Blackwell architecture is everywhere, adopted and deployed by every major hyperscaler, every cloud provider, and every major model maker. Last month, we celebrated OpenAI's launch of GPT 5.5, co-designed for, trained with, and served on Blackwell, currently positioned at the top of artificial analysis leaderboards. Microsoft's Fairwater, the world's most powerful AI data center, is now live, ahead of schedule, powered by hundreds of thousands of Blackwell GPUs. Starting this year, AWS will add more than 1 million Blackwell and Rubin GPUs and are collaborating on Spectrum networking. At Google, Blackwell will be offered to customers in the cloud, including confidential computing capability, a new foundation for secure, high-performance AI. Our share of frontier AI compute is increasing. We have deepened our collaboration with Anthropic and are delighted to be a strategic partner to expand their compute capacity. We will support the company's growth trajectory through AWS, Azure, CoreWeave, SpaceX AI, and more. Now, with the addition of Anthropic to OpenAI, Gemini, SpaceX AI, Meta, SL, Microsoft AI, TML, Reflection, Perplexity, Cursor, and other major frontier labs already building on NVIDIA. Our share of frontier A models will grow significantly. Today's data centers are revenue-generating AI factories. Constrained by power and capital, AI factory operators must choose the right architecture. With our extreme co-design approach, we deliver the industry's lowest token cost, the highest token throughput, and the highest ROI. MLPerf inference results are in, and once again, we swept every benchmark as Blackwell Ultra delivered the highest throughput across the broad set of models and deployment scenarios. Full stack innovations drove the 2.7x increase in throughput and a 60% reduction in the cost per token on GB300 compared to just 6 months ago. NVIDIA Compute is not just the highest performance AI infrastructure, it is the most economic and financeable. Customers do not buy GPUs, they build AI factories. And the right economic metric is not the purchase price of the GPU, it is the lifetime cost of an AI factory producing intelligence, token per watt, tokens per dollar, uptime, utilization, time to production, software durability, and asset life. NVIDIA excels at all of them. Agentic AI and reinforcement learning represents new growth opportunities for CPUs. Building on the success of our Grace CPU, Vera is arriving just in time to meet this inflection. Built on custom ARM cores and co-designed end-to-end with Rubin GPUs and NVLink, Vera will deliver up to 1.5x faster performance per core, 2x performance per watt, and 4x density per rack compared to x86-based alternatives. Vera CPU opens a brand new $200 billion TAM for NVIDIA, a market we have never addressed before. And every major hyperscale and system maker is partnering with us to get it deployed. We have visibility to nearly $20 billion in total CPU revenue this year, setting us up to become the world-leading CPU supplier. Our annual product cadence, a pace that is unmatched, remains a key pillar supporting our market position. We are on track to commence production shipments of Vera Rubin in the second half of this year, starting in Q3. By integrating 7 purpose-built chips across 5 accelerated racks, Vera Rubin will deliver up to 35x higher inference throughput and up to 10x greater AI factory revenue compared with Blackwell. As an early adopter, Google's A5X bare metal instances, which can support up to 960,000 Rubin GPUs across multiple sites, can enable customers to run their largest AI workloads on NVIDIA's optimized infrastructure. While the US government has approved licenses for H200 to be shipped to China-based customers, we have yet to generate any revenue, and we are uncertain whether any imports will be allowed into the country. As a result, consistent with last quarter, we are not including any China data center compute revenue in our outlook. Let me move to edge computing. Our edge computing market platform generated $6.4 billion, up 10% quarter over quarter and 29% year over year. Robust Blackwell workstation demand was a strong contributor to the growth, while consumer demand fell modestly due to higher memory and system prices. Our physical AI continues to gain momentum, exceeding $9 billion in revenue over the last 12 months. Our partnership with Uber will power their robotaxi fleet across nearly 30 cities and 4 continents by 2028. And in robotics, leading companies across a range of industrial, surgical, and humanoid applications are building on NVIDIA's technology to develop and deploy at scale. We remain front-footed in securing sufficient supply to support our customers' growth. In Q1, we increased total supply, inclusive of inventory, purchase commitments, and prepaids to $145 billion. While we are not immune to supply challenges, we remain confident in our ability to support the growth opportunity ahead. With our intense focus, scale, and longstanding partnerships with critical suppliers continuing to serve us well. Let me move to the rest of the P&L. GAAP gross margin was 74.9%, and non-GAAP gross margins was 75%, largely flat sequentially by Blackwell systems continued to account for most of our shipments. GAAP and non-GAAP operating expenses were up 12% sequentially, primarily due to higher compensation and an increase in compute and infrastructure costs. Our non-GAAP effective tax rate of 16% came just below our prior outlook due to favorable geographic mix. And on our balance sheet, days sales outstanding was 45 days due to favorable timing of collections. We expect to return to the mid-50s in Q2. We generated record free cash flow, $49 billion, up from $35 billion in Q4. I'd now like to update you on our capital allocation plan. First, to reiterate, our intention is to prioritize R&D and strategic investment. Both will enable us to cultivate our ecosystem, drive market growth, and strengthen our market position. As a key enabler of AI, we will make investments necessary to deliver the industry's lowest cost per token and the highest token throughput, which will help our customers and partners scale and expand the AI frontier. Return program is another key component of our capital allocation strategy. Given confidence in our long-term free cash flow outlook and our commitment to sharing our success with shareholders, we are increasing our quarterly dividend from 1 cent to 20 cents per share. We plan to review our dividend on a regular basis as we continue to scale our business. We are also announcing an $80 billion share repurchase authorization, which is in addition to the $39 billion remaining on our current plan. As we indicated at GTC, we plan to return roughly 50% of free cash flow to shareholders this year. Let me turn to the outlook for the second quarter. Total revenue is expected to be $91 billion, plus or minus 2%. We expect sequential growth to be driven primarily by data center. We are continuing to work vigorously on our supply chain ecosystem to address the incredible demand we see ahead of us, giving us full confidence in the $1 trillion in Blackwell and Rubin revenue we foresee from 2025 through calendar 2027. GAAP and non-GAAP gross margins are expected to be 74.9% and 75% respectively, plus or minus 50 basis points. For the full year, we are still expecting to be in the mid-70s. GAAP and non-GAAP operating expenses are expected to be approximately $8.5 billion and $8.3 billion, respectively. For the full year, we now expect OpEx growth to grow somewhere in the upper 40s on a year-over-year basis, driven by higher R&D and acceleration in the usage of AI tools to enhance productivity. For the full year 2027, we expect GAAP and non-GAAP tax rates to be between 16% and 18%, excluding any discrete items from material changes to our tax environment. This is lower than our prior expectation of 17 to 19 due to changes in geographic mix. That puts me at the end of this part, and I'm going to now turn this over to the Q&A with Toshiya.
Thanks, Colette. We will now transition to Q&A. Operator, please poll for questions.
Thank you. At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster. As a reminder, please limit yourself to 1 question. Thank you. Your first question comes from Joseph Moore with Morgan Stanley. Your line is open.
Great. Thank you for letting me ask a question. I guess I'd like to ask, what drove the change in segmentation? What's the philosophy behind giving us the numbers that way? And then can you talk about, any competitive differences between the two segments and this kind of surprising CPU number that you talked about? How do you see that across the two segments as well? Thank you.
Yeah, thanks, Joe. First of all, Colette meant to say we're increasing our quarterly dividends from 1 cent to 25 cents. I think that extra 5 cents would mean a lot to the large shareholders. So anyhow, let's see, Joe, on the segmentation and the description of the business, we wanted you to understand our business better. AI is very diverse, and computing is diverse. They're diverse in several ways. The first thing, of course, is AI includes languages, and depending on the different industries, it could be 3D graphics for manufacturing and industrial robotics. It could be proteins for life sciences. It could be small chemicals for life sciences or material sciences. It could be physics for the physical sciences, whether it's in the energy sector or, of course, the science labs, higher education, so on and so forth. So AI is diverse. The second thing is the applications are diverse. It could be in enterprise. It could be in the energy sector, manufacturing sector, and such. Where it runs is diverse. It could be in the hyperscale cloud. It could be AI natives. These a whole network of AI natives that are cropping up around the world. Enterprises on-prem, industrial in the factories, in the plants, all the way to supercomputing centers and the edge. Edge including, of course, what most people see, self-driving cars, robotics, but a large growing network of computers inside manufacturing plants, whether it's a chip plant or packaging or computer plants, all kinds of different types of manufacturing plants. And then, of course, in the future, every single base station, every single radio network would become an AI-powered radio network. And so where it runs. And then lastly, how it's governed. It could be operated by a public cloud, but it could also have regular industrial regulatory reasons that prevents it from being run in a regulatory cloud. It could be because of confidential computing. It could be because of national security reasons. Different data centers have to be built differently. NVIDIA is quite unique in the sense that we are the only company that builds all of the technology components. We build it in an extreme co-design way, in a complete end-to-end way, in a full stack way. But then we, of course, open the platform so that it could be integrated into all the different environments. But some environments just require, an enterprise, for example, require a company who has all of the technologies working together so that they don't have to build it. They would like to buy it and operate it. And so there's many different segments of the data center market where NVIDIA's total solution, fully integrated solution with full stack, but still open, that way of producing or delivering products is really, really important. And so if you look at our different segments, the way we broke it out into 3 large segments, you take all of the words that I just said, and you try to find the simplest factoring of it. It would be the hyperscale clouds. That would be one large segment. And within that segment, there's 3 different ways that we operate. First way is that we help the hyperscale clouds accelerate their data processing and machine learning workloads. We accelerate and support their AI processing inside. We also, of course, bring a lot of business, NVIDIA ecosystem business, to their public clouds. And so that's one segment. The second segment is AI natives, enterprise on-prems, industrial on-prems, and sovereign AI. That segment is growing incredibly fast because everybody needs AI, and we're going to see AI being adopted by every industry, every country, every company. And so everybody wants to build it in a different way. And the fact that we provide the entire solution, it makes it much easier, it makes it possible at all for people to be able to build these things. And then, of course, the robotic edge. Today, Yesterday's computing was largely about personal computing. In the future, it's going to be about personal AI. And that personal AI, one example of it is the self-driving car. It's a robotic system that's essentially your personal AI. And of course, there'll be all kinds of different types of robotic systems, including even the base station radio network, as I mentioned, is going to be essentially a robotic system. So that's the reason why we broke it all apart this way. It's the simplest way of understanding our business. Each one of them have different stacks in a lot of ways. They have different operating systems. They operate in a different way. We go to market very differently in each one of them. The easiest go to market, of course, is the hyperscaler, because there are only 5 or 6 of them. But the rest of them, the rest of the industry represents a couple of 250,000 companies around the world. That go to market is very complex, very diverse. Your understanding of AI has to be extremely diverse. And as you know, Nvidia has the largest suite of acceleration libraries in the world, from computational lithography to fluid dynamics to particle physics to molecular dynamics, to the list goes on. And all of those libraries are essential for us to engage the vertical industries that represents the second and the third category. Okay, so anyways, it's really about the fact that our business has now evolved and grown to such a large scale. It's helpful to segment it so that you have a better understanding of how our business works.
Your next question comes from Ben Reitzes with Melius Research. Your line is open.
Hey guys, thanks so much. I wanted to ask Jensen, I want to ask you about your philosophy on growth. Your data center business ex-China grew about 120% in the quarter, and then you're guiding about 100. CapEx at the hyperscalers is forecast by many, including myself, to grow 90 to 100% this year. And you talked about data center, still on track to be 3 to 4 trillion by the end of the decade. I was just wondering, is the goal for the company to grow faster than hyperscaler CapEx? Are you comfortable in kind of endorsing that view? And do you still see hyperscaler CapEx kind of still growing after this year at a very rapid clip? Thanks a lot.
Yeah, thanks, Ben. So first of all, we should be growing faster than hyperscale CapEx. And the reason for that is illustrated by the segmentation that I just described. Our data center business has 2 large parts. It has more parts than that, but we combined it into 2 large parts for simplicity's sake. It's much more complex than the 2 large parts, but I combined it into 2 so that it's at least easier to understand. Okay, and so if you look at the first part, is hyperscalers. That's the hyperscale CapEx that you were just talking about. And there are $1 trillion this year. I have every expectation it's going to grow from here for fundamentally good reasons. This is the way computing is going to work in the future. And if they don't have the compute, they won't have the revenues. It is very clear. Compute is revenues. Compute is profit. And so the world is changing. Software didn't used to use SaaS, it didn't used to use as much compute, but AI requires a tremendous amount of compute. But you could do, of course, incredibly more, which is the reason why we heard about the AI frontier AI companies, both Anthropic and OpenAI, growing at an incredible pace. The fact that they can grow within 1 month, what some of the SaaS companies would have taken a decade to grow, tells you something. And so the first category is hyperscale, and the CapEx is at $1 trillion, and it's growing towards the 3 to 4. The second category is all of the AI native clouds. They're regional. They're all over the place. There are startups all over the world supporting those companies. They're enterprise, 250,000 enterprise companies around the world. Many of them will have to build or want to build AI factories for themselves to operate. Many industrial companies, there's no choice but to put the computer where the context is, where the action is. You can't put that in the cloud. It has to respond reliably, quickly, every single time. Can't imagine, a chip plant, a chip fab being connected to a cloud service provider. Doesn't make any sense. And so the second category, and then sovereign AI clouds. And so there's a whole category of data centers that semi-custom chips just don't apply, because these data centers want to buy systems, they want to operate systems, they don't want to design, they don't want to build it themselves. And so the second category is extremely diverse. Instead of 5 or 6, 7 companies representing the revenues associated with our first category, the second category is hundreds, thousands of companies, and in the future it'll be hundreds of thousands of companies with a large number of companies with smaller installations. And that category is going to continue to grow at incredible pace. This second category, when I talk about physical AI and I talk about how the rest of the $100 trillion industry that has not been impacted by IT in the last 30 years, it's about to be impacted by AI. That is the segment that I'm talking about. The second cluster is growing incredibly fast. Our share of that, of course, is very, very large. We're fairly unique in our ability to be able to serve this industry. Our platform is built like it's vertically integrated so that everything works. But then we disassemble it so that people can build and buy it in the configuration they want and assemble it the way they like. And so this second category is fairly poorly understood because there are just so many small companies or so many companies, and each one of the installations are relatively small compared to, of course, one of the hyperscalers. And so if you look at the segmentation and the size of each, you could see that, in fact, we're growing share in the hyperscalers because we now have much bigger support from Anthropic, a new partner of ours, and we're helping them expand their capacity greatly in the coming years. And then the second, very few companies have exposure into the second category because of the platform solution that we have.
Your next question comes from C.J. Muse with Cantor Fitzgerald. Your line is open.
Yeah, good afternoon. Thank you for taking the question. You have Vera Rubin coming soon, and you obviously have great insight into coming updates to frontier models and new techniques to optimize around diverse AI workloads. With investors keenly focused on your market share and inference, how do you see Vera Rubin and your extreme co-engineering impacting your share of the inference market, as we look into late 26, 27?
Well, we are growing share in inference, and we're growing share in inference very, very quickly. And the reason for that is this year, the number of frontier model companies grew. And so there's Cursor and Perplexity, and there's some new model companies, TML and Reflection, and the list goes on. And so the number of frontier model companies has grown. And we added Anthropic to our partnership this year. They're expanding incredibly fast. We've partnered with them to secure computing capacity across Azure, AWS, CoreWeave. I forget who else we've already announced, but there's a whole list of others that we are bringing online for them. And so the amount of capacity that we're going to bring online for Anthropic this year and next year is going to be quite significant, very significant. And so we're growing, and our coverage of Anthropic has been largely zero until just recently. And so we're gaining share tremendously fast in inference. Vera Rubin is going to be even more successful than Grace Blackwell at this point. Every single, I can't think of one, every single frontier model company will jump on Vera Rubin from the get-go. and that wasn't true before on Blackwell. And so Vera Rubin is off to a tremendous start, and it'll surely be more successful than even Grace Blackwell. So I think the end of your answer, CJ, is that we're gaining share in inference. Let me go back again to the question that Ben was asking. Remember, so far, everything that I've just explained in the inference question is really focused on hyperscale. Remember, there's a whole second category of AI data centers that we serve almost uniquely. This segment is very fragmented, requires a really well integrated platform solution, and a very large go-to-market. And that segment, all of the inference, 100% of that, the vast majority of that, is NVIDIA. And then, of course, physical AI. NVIDIA is practically the only company serving physical AI today. And we've been working on physical AI for a long time. And so that is also growing. So our share of inference is growing very quickly.
Your next question comes from Timothy Arcuri with UBS. Your line is open.
Thanks a lot. Jensen, I wanted to ask about the traction you're getting with some of these custom merchant things you're doing, stuff like CPX and LPX. And I just wanted to ask and see sort of, you've talked before about fast instance being, I think, 20% of the market. So I would imagine you're getting pretty good traction with LPX. So can you just talk about that and maybe, also how that fits into your broader platform strategy? Thanks.
The LPX is designed for low latency and high token rate, but its throughput is low. Its model size capacity is low, and its context processing, its ability to absorb a lot of context, for example, for software coding, for agentic workloads, its ability to absorb a great deal of context is lower. And so the challenge is simply, and I've explained before that the use case for LPX is not broad. It's intended for somebody who has a fairly large portfolio of different types of token services. And for the high token rate, maybe these services are quite premium. And the number of customers is not significant, but the token rate is very high. And so that remains exactly consistent with what I've said before. And I still expect that. And so I expect that LPX and other SRAM-based decode focused token, high token rate generated focused accelerators will be a niche product for some time to come. As you know, Grace Blackwell and Vera Rubin, we support the entire life cycle of AI, from the data processing, preparing for training, data processing, to pre-training, to post-training, reinforcement learning, all the way to inference. Grace Blackwell is the best platform in the world to do all of that. And if in certain circumstances, so long as the customer, the provider already has a high token rate service that they can offer, then we can tack on an LPX and they could deliver that service even better. And so that's how I see the market. And I think whether it's 20% or 10% just depends on where we are in the development of AI. I think today it's a lot less than 20%. Someday these premium tokens could be 20%, and I'm we're ready to work with service providers to enable this capability. I'm excited about it.
Your next question comes from Vivek Arya with Bank of America Securities. Your line is open.
Thanks for taking my question. Jensen, there's a lot of excitement around CPU for agentic applications and just a lot of noise around the number of CPUs actually exceeding the number of GPUs. And I was just hoping that you could kind of, give your perspective that, first of all, is this an incremental workload? Is this kind of cannibalizing what the GPU would have done otherwise? And then secondly, the 20 billion number that you gave, is that for standalone Vera CPUs, or is that kind of already included in that Vera as part of Vera Rubin? So just if you could educate us on the role of CPU versus GPU. Is it cannibalistic? Is it incremental? And then the 20 billion number, how to kind of put that in context with what you sell, right? Which is usually the CPU as part of the GPU. Thank you.
The 20 billion is for a standalone CPU, and remember, we have Vera is used in 3 ways as a standalone CPU, 4 ways. Let me just start with the one that you already know. The first way is Vera Rubin, and we'll sell millions of Rubins, and every 2 of them is connected to a Vera. And of course, we price those too, and they're properly priced. And so that's number 1 use case. The second use case is Vera standalone CPU. The third is Vera with CX9 and the software stack for storage. And then Vera with CX9 with a software stack for security and compute isolation and confidential computing. Okay, so each one of those use cases is built on Vera, and my sense is that we'll be supply constrained throughout the entire life of Vera Rubin. There are 4 different use cases of it, and but anyhow, the answer to your question is of the 20 billion is a standalone. With respect to CPU use, an agent is essentially what people call a harness. The agent has a harness that does and the harness could be OpenClaw, it could be Hermes. Claude Code is essentially a harness around Claude, around the Opus model. OpenAI's Codex is a harness around the GPT 5.5 model. And so these are harnesses, and these harnesses provide for things like I/O, orchestration, memory management, tool use connected to tools, for example, browsers and things like that, C compilers, Python compilers. And so the harness runs on CPU, and the tool use runs on CPUs. So for example, if the AI were to do a search or do a browser, use a browser, that would run on the CPU. The world has a billion users, human users. My sense is that the world is going to have billions of agents. Not today. I mean, we're going to grow into it, but it will have billions of agents, and those billions of agents will all use tools, and those tools are going to be like PCs, just like us humans using PCs today. In the future, you'll have an agent using PC. And so if you kind of think along the lines of in the future, you pick your favorite number of agents at the moment, at the moment, call it a few 100,000, but in the future, call it, eventually a few billion. I could imagine them all using effectively having PCs that they can all use. And but the large language, every one of those agents are going to spin off sub-agents, and every time they spin these off, you're going to need to do inference. That's where the thinking happens. All of the thinking happens on GPUs. All of the orchestration essentially runs on CPUs, and the sub-agents, when they're spun off, when they're thinking, they use GPUs. Whenever the agents use simulators, those can run on CPUs or GPUs, which is the reason why we're working so closely with Cadence and Synopsys and to accelerate all of the world's tools. We're accelerating all of the world's tools and data processing engines and database engines because agents use these tools and they have lower patience tolerance than humans, and they want things to happen quickly. And so we're accelerating all of the world's tools so that it runs on CUDA. And you could see us doing that, when I work with Cadence and Synopsys and Siemens and companies and Adobe, and that's because we're trying to get all of the world's tools to run on GPUs because they already have GPUs and it's a lot faster. So we're going to need a lot more CPUs, and Vera was designed to be an agentic CPU. The CPUs of the past were designed to have many cores so that it could be easily rentable. People rented cores. Well, agents don't rent cores. They just want the work to be done fast. The economics of the past was dollars per core. That's the economics of cloud computing of the past. The economics of AI of the future is tokens per dollar or dollars per token. And so what we need to do in the future is to generate tokens, process tokens as fast as possible. And that's what Vera does incredibly well. So we're expecting to be very successful with Vera, but ultimately what we're doing is we're building infrastructure for AI, and it needs incredibly great storage. That's the reason why we built STX. It needs incredibly good networking. That's why we have Spectrum-X. It needs incredibly great GPUs, of course, and inferencing ability. That's the reason why NVLink 72. It needs incredibly great security and confidential computing, which is the reason why Vera Rubin's the world's first platform with end-to-end confidential computing. And it needs, great CPUs. We've got it all covered.
Your next question comes from Stacy Raskin with Bernstein Research. Your line is open.
Hi, guys. Thanks for taking my question. I wanted to go back to the segmentation. So first of all, I'm just curious, where do you put the neoclouds across those two segments? Are they in hyperscale or are they in the AI cloud? Part of me assumes the latter, but I'm not so sure. And then if I just look at the magnitude of them, I mean, they're both about the same magnitude now. It almost sounded to me like you were suggesting that you thought the latter, the AI cloud, would grow faster, maybe going forward, than hyperscale. Is that what you're trying to say, or do you just see like the same kind of growth coming from both segments?
First of all, you're correct that AI native clouds don't build chips, don't design their own chips, and they don't want to. They can't really assemble, unrelated parts together into an AI factory. And their patience, their tolerance for time to first token is extremely low. And their need for an architecture that has a great deal of offtake so that it runs every model, has customers from everywhere, is incredibly high. And so that's the reason why NVIDIA's architecture is so perfect for them. We offer every component, and whatever we don't offer, our ecosystem of partners offer it, and it's all fully integrated. It all works together. The number of customers that could rent it from an AI native is incredibly high. Basically, every single AI builder, every AI native startup around the world, SaaS companies, enterprise companies, industrial companies, and so our computing, our architecture is the most rentable of any computing platform in the world. So it's the most performant. It's the easiest to put together. It's the most rentable, has the best TCO, and it's the easiest to finance. And so all of those properties are quite unique to the needs of AI natives. It's in the second category. They're very similar to even OEMs and so on and so forth, large enterprises and so forth, surprisingly. Okay, so we put that in the second category. If you look at that segment, it started growing after the AI ecosystem developed in the hyperscale. Hyperscale developed AI first for a lot of reasons. They have great computer science, they have excellent data center capability, and they also focus largely on consumer applications, which, if not perfect, is not the end of the world. It enhances the service so long as it enhances the service. And so for many of the other applications, industrial applications, enterprise applications, until the AI is very capable and does really productive work and does it safely, and it could do it in a way that can actually generate impact and income, it doesn't really get used. And so you expect the second category to develop slower than hyperscale, and you could see that in the numbers. However, long term, if you look at industrial and enterprise, clearly that's where future economics is going to be, because it represents some, 50, $80 trillion of the world's economy. And so, and it's going to be larger than that because of AI. And so I expect the second category to be larger over time, both in the near term. Over the next several years, I think it's a foregone conclusion. Both are going to grow incredibly fast. I expect the second category to still grow faster, but both are going to grow incredibly fast. And then I'm hoping that within the next 5 years, physical AI and robotics segment is going to grow incredibly fast.
Your next question comes from Jim Schneider with Goldman Sachs. Your line is open.
Good afternoon. Thanks for taking my question. Back at GTC, I believe you discussed a $1 trillion visibility into both your Rubin and Blackwell platform revenue, but I believe that excluded things like LPX, Rubin CPX, and the Vera CPU racks. Could you maybe give us a sense about whether the Vera CPUs are going to be the biggest source of upside above and beyond that $1 trillion? Are you contemplating other sort of combinations of products, including CPUs, that would allow you to gain an even greater share of that total TAM? Thank you.
In terms of incremental above the trillion, I would say one, the continued growing of share of the frontier AI models. I'm expecting to grow more share, and so I'm expecting that to grow. Number two, we didn't include any Vera CPU, standalone CPU in that number, and so I expect that to be the second largest. The TAM is, of course, quite large in agentic systems, and all of our customers are quite excited about Vera, and we're going to sell a whole bunch of Veras. And then third would be LPX. Because as I explained earlier, LPX is designed because of its SRAM architecture, it has the benefit of very low latency, very, very high interactivity, but it's also its throughput, its context processing ability is also quite limited. And that's just kind of the nature of SRAM type based systems. And but the combination, we'll be able to address the entire spectrum of AI from pre-training to post-training to inference to agentic systems through the combination of Vera Rubin and LPX.
Your next question comes from Joshua Buchalter with TD Cowen. Your line is open.
Hey guys, thanks for taking my question and congrats on the great results. Colette, I believe in your prepared remarks you mentioned GB300 is sort of the fastest ramp in the company's history. How should we think about Vera Rubin against this benchmark? It's obviously a new architecture at the silicon level, but it's a similar rack. Does that mean we should expect a similar slope to the Vera Rubin ramp as the GB300, or should it be a bit more gradual given the new silicon? Thank you.
Yeah, well, we have indicated for a while that we will be launching Vera Rubin in the second half. We will start in Q3. That will be our initial pieces together. And then once we get to Q4, we're probably going to start to see our ramping continue. It's hard to say at this point what will be a faster ramp. But again, we have demand already planned. We've got POs. We've got almost all of our major customers ready to go. And these are very complex systems that we need to put together. So I think it's just about the timing that it's going to take for us to get that into market. Nothing else other than getting from production of all of the different systems that we have ready for ordered. So a little early to say, but yes, we're going to start in Q3 and continue to ramp into Q4. And Q1 of next year certainly is going to be very big as well.
There are no further questions at this time. Toshiya Hari, I turn the call back over to you.
Thank you. Before I hand it over to Jensen, please note Jensen will be giving a keynote at GTC Taipei at Computex on June 1st. We will also be participating at the TD Cowen TMT conference on May 28th and the Bank of America Global Technology Conference on June 4th. Our earnings call to discuss the results of our second quarter of fiscal 2027 is scheduled for August 26th. With that, here's Jensen to close us out.
This was an extraordinary quarter. Demand has gone parabolic. The reason is simple. Agentic AI has arrived. AI can now do productive and valuable work. Tokens are now profitable, so model makers are in a race to produce more. In the AI era, compute capacity is revenue and profits. NVIDIA is the platform of this era. Of all the platforms in the world, NVIDIA Compute supports the richest diversity of demand. Let me highlight my top 5 things. First, NVIDIA is the only platform that runs every frontier AI model. With the addition of Anthropic to our existing partners, OpenAI, xAI, Meta MSL, Gemini, and many others, our share of frontier AI is growing. Second, we are in every hyperscale cloud, supporting their core data processing and machine learning workloads, internal AI services, as well as supporting their demand for NVIDIA users in their public cloud services. Third, our full stack complete AI factory solution and vast global ecosystem let us uniquely address new AI data center segments, new AI cloud natives, new AI native clouds, and sovereign AI clouds, and on-premises enterprise and industrial infrastructure. This is that second category I was talking about earlier. Fourth, NVIDIA CUDA extends all the way to the edge. Robotics, autonomous vehicles, embedded medical instruments, AI, RAN, telco, base stations. The next wave is physical AI, with billions of autonomous and robotic systems operating in the physical world. This is the third segment we were talking about earlier. And rounding out the top 5 things, we have a major new growth driver, Vera, the world's first CPU purpose-built for agentic AI. Vera opens a brand new $200 billion TAM for NVIDIA, a market we have never addressed before. And every major hyperscaler and system maker is partnering with us to deploy it. The world is rebuilding computing for agentic AI and robotic physical AI. NVIDIA sits at the center of these transitions. We built NVIDIA Compute platform over 3 decades. One architecture, vast ecosystem, extreme co-design across chips, systems, networking, and software. We built it ahead of this moment so that when agentic AI arrived, NVIDIA would be ready. It has arrived. Look forward to catching up next time.
This concludes today's conference call. You may now disconnect.
All right, guys. So that is the NVIDIA earnings call. I think I actually turned my sound up way too much. But that is the end of the NVIDIA earnings call. NVIDIA flat on the day. Hasn't really moved that much. Moved a little bit when it first dropped. I thought mostly good things. What do you guys think? Bull or bear on NVIDIA earnings? Let me know in chat right now. Are you bullish or bearish on NVIDIA earnings? Let me know. With that said, though, guys, I think I'm going to hightail it on out of here. Y'all be good. Have a great day. Be safe. Again, if you want to help support the channel, you can check out Lucid. Lucid, they fund traders. So if you ever wanted to get started day trading, but you don't have that much money, try Lucid. They give you a demo, test your skill. You can get in for right now 50% off. They have a direct to funded on Lucid right now. That is, you can use the 50% off 2 times. Direct to funded on Lucid right now is this one is $420 at the end. So pretty cheap, all things considered, pretty cheap for a 150K funded account. 90% split, 10-to-1 micro scaling allowed, and more in futures. You can day trade the S&P, NASDAQ, Dow. Let's look at the NASDAQ here. Here's the NASDAQ. NASDAQ is red on the day now as well. So we kind of turned the other way here. Let's see what we get here, guys. See what we get. If you want to check out Lucid, I'll put the link up. And yeah, we'll see what happens. Here's the link. Check it out. They are an affiliate of mine, of course. I'm biased. I get paid by them. So I see Bull. I don't know. Thank you, John. Bull. Hey, what's up, Tiny? Bull. Bear. Rot. Bull. Badump. Bullish. Bull trap because too many bulls. Yeah. We'll see what happens. Here's the NASDAQ. Here is Nvidia right now. Right at that previous closing price. We'll see if that previous closing price props us up as support. But I will see you guys later. Y'all have a great day. I'll see you guys tomorrow bright and early. We got jobless claims, unemployment filings going live tomorrow as well. So we'll see what happens with Nvidia tomorrow. Y'all have a great day. See you guys.